What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. Happy, what's today? Today's Friday? Is today Friday? Today's Friday. Happy Friday, everybody. Hope you're all doing well. Hopefully audio is okay. Just gonna check that on my side. Yep, should be good. Yesterday we had Apple earnings, which I wanted to just briefly talk about. We've been doing this throughout earnings season so far, which I think is a great thing for us to be doing. If you're somebody who watches the indices, if you trade Nasdaq, well, really, if you trade anything related to the stock market, understanding how earnings reports are coming in, most notably for the big companies, like the most important companies, I think is an indicator that is incredibly powerful. So anyways, we've had a really good round of earnings so far. Yesterday, or the day before yesterday, we had an incredible result from the big four, right, that we had report their earnings, that of course being Meta, Microsoft, Amazon, and Google or Alphabet. Yesterday we got Apple. So we continued the earnings train. Let's just take a look at it because I haven't really looked at it close. What I'm using here is the Stockbox's new earnings report grade that basically it is an AI generated report of what was basically shared during Apple's earnings report. Now, of course, they share earnings and they also share forward guidance, both of which are really important. So Stockbox gave us here a B in regards to the earnings report. Revenue came in at 111, excuse me, 0.18 billion. That was around expectations, just a slight miss on revenue, at least in regards to the expectations that Stockbox found. Sometimes there are various different expectations, right? There's always sort of a consensus about what things will be, and then there's an actual that comes out. So revenue was decent. Earnings per share was a very slight beat. The price reaction, the data didn't load here, but it was a slight positive move higher in the stock. The stock is up here this morning so far. Forward guidance is neutral. No specific details on raising, lowering, or maintaining projections for next quarter or full year. Commentary highlighted strong iPhone demand and services growth. Just a quick snapshot look at the valuation metrics for Apple. Stocks trading around its usual PE ratios. So, and for that matter, just while we're on the subject, when we look at things like Meta's trading cheaper than usual. If you take a look at Google, is kind of expensive, but it's not like ridiculously expensive. You can see it's trading above its 3-year averages, but not to an unbelievable level. Amazon is trading cheap relative to its history. That has been an ongoing theme. The stock has gotten, on a price to earnings basis, it's gotten cheaper over time. And so I like that. It's part of the reason I like Amazon quite a bit. It's my biggest stock holding currently. Anyways, we have a couple things interesting here. S&P 500 pretty much flat on the day, and kind of walking away from this week with another victory, right, for the Bulls. The Bulls have been on a 1, 2, 3, 4, 5 week winning streak. No rest for the Bears, right? Just nothing but green for the S&P 500. Same thing for the Nasdaq, arguably, well, definitely even more aggressive to the upside. The Dow Jones is now pushing back towards its all-time highs. And the wheel keeps spinning, right? It's tough to be a bear. We've said that for forever on this channel. This is, I don't short indices for this very reason. You can pile up a million things to worry about, and the stock market can still shrug it off and go higher because of a simple reality that we always talk about on this channel. I say it over and over. It's because people ultimately, yes, scary stuff in the world is happening, geopolitical stuff. Trump said something crazy. So-and-so did this. But at the end of the day, are stocks going to go up or down? It ultimately depends on whether or not they are going to make more money or less money in the future. And right now, the very, very clear consensus in this market is that stock earnings are not getting hit. People are still on YouTube watching videos. People are still on their meta platforms, scrolling Facebook, Instagram, etc. Why do I bring that up? Because that means those companies are still making money. They're still growing. We just had earnings from those companies reiterating massive earnings per share growth. And we also had reiteration from those big companies that they're going to keep spending money on AI in the form of building out data centers. Semiconductor demand is off the charts. And so the point is, sure, Strait of Hormuz, all these things, those are worries that the market has, but they are secondary to the most important narrative of all. Are corporate earnings growing? And right now, they are growing. Does that mean that I just go out and just buy everything and just put my head down and just, ignore, and I'm just going to chase the market? No, that's not what that means. It's just that being a bear, you have to address the question, are earnings for companies going to massively deteriorate? That's the bear case, right? And I don't think that the Strait of Hormuz stuff is enough to completely tank corporate earnings for these companies that, they just keep racking in more and more money. They're growing everywhere. It's fantastic. Hey, thanks so much for the 10 pounds there. Hi, Nick. Do you reckon the Aussie Swiss trade will play out in your favor, as it's been quite slow? And do you reckon it's waiting for the Aussie interest rate decision before it skyrockets? Well, so one thing that is really important when it comes to a trade idea that I might have is on any single trade idea, I have no idea how that trade will play out. I wish I could tell you with more confidence, but I've been doing this for 10 years. And at this point, I'm less and less predictive on which one of my trades are going to be the one that works. I'll give you a really quick example. Yesterday I went long oil, right? So far, it's starting off not great. I never know which one. I still like this idea, by the way. I still like long oil. But if it falls apart, whatever, next trade. Aussie Swiss, pound CAD, those are two other trades that I have on right now. Aussie Swiss, so far looking good. But I really don't, like every trade idea that I have, I kind of treat equally. I'm like, okay, do I think there's a setup? Do I think there's a good risk reward? Okay, cool. Prove it. Let's see. I don't believe you, right? I pretty much assume that most of my trades are not going to go great because statistically that's how that goes. With my style of trading, what I mean is I look for big runners. Now in currency land, I have a little bit more of a defined target because currency is just inherently a little bit more mean reversion-y. They chop back and forth quite a bit. So I do take profits on stuff. And we're approaching kind of that first target that I have on Aussie Swiss. But I do think that, Aussie Swiss could see a rally up. I do like the Australian dollar. I think that it is bullish right now. But that in no way means I know for sure that the Aussie Swiss is going to work, right? Um, and I know where you're coming from. If you're asking that question, you're like, I really hope Nick's trade works out. Well, you're thinking about it. I'm not saying this in any way like disrespectfully, but you're probably thinking about it more than I am, right? Because this is just another trade in the book for me. Like this is another, I'll take 1,000 of these, you know? I'm not worried about really strongly paying attention to the outcome of one trade. Pound CAD, for example, another one that I've got. This one's back to break even. This one's gone pretty much choppy nowhere for the last few days. But then I look at something like oil and I say, okay, you know, these are trade setups that I'm shooting for a big runner on things like oil. I mean, I trade a little bit differently, right? Where I'm trailing stops. I'm trying to let that winner really run. But yes, I really never know with any single trade the probability of the outcome. And again, to kind of address that question, I kind of assume like every one of my trades is going to lose because then I don't set any sort of like expectation for it. Obviously, not all of my trades lose, but I'm pointing out like every time I take a position that is like a directional call, I think to myself something like, all right, we'll give it a shot. Probably won't work, but if it does, we're going to try and maximize that winner, right? So I do like the Australian dollar. Like I'm not saying like I don't think it will work. I'm just saying like if I fully didn't think it would work, I wouldn't be in the trade. But I'm not setting my expectations really high that this is going to be a giant perfect winner and that the Australian dollar is going to melt off. Like I do like the setup. I like the Australian dollar. I still think the Australian dollar is looking really attractive, but that in no way guarantees that it's going to work. I just want to set that precedent because it's important, right? Like the thing is, you can do everything right in setting up a trade, and then something can change in the market and ruin your trade. And so if we are expecting the unexpected, we're going to be better off rather than like, okay, I've lined everything up. I bought the perfect support level. I put my stop loss in the right place. Fundamentals look good. It has to work. That frame of mind will get you in a lot of trouble in trading because it's not how the markets work. The markets are simply not that predictable. You have to kind of take the thought of like, if you're playing poker, right? I'm not a good poker player. I'm just not. I enjoy playing. It's fun, but I know I'm not good. And I know what it would take for me to be good because in many ways there are contrasts, there are comparisons to trading. But a good poker player can't control the cards, right? You can't control what the cards that are dealt to you. You can have just a night where you just get bad cards handed to you. But a really great poker player, just like a really good trader, is going to take a mixed bag of hands for the night and still find a way to minimize the damage. And then on nights where they get good cards, they're going to maximize profits. That's all we can do as traders. It is like playing poker. There are ways statistically to make money overall in poker, just like in trading. But you can't control whether or not the next couple cards that get handed to you, in this case, my Aussie Swiss trade, my oil long trade, my pound CAD trade, I can't control the cards on this one specific hand. I can control my outcome over many, many hands in poker. I can't personally because I'm not very good at poker. But you see where I'm going with this. The analogy is you can't control the cards dealt to you. That's the markets. You cannot control what the Australian dollar does. You can't control what oil does. You can make educated guesses. You can manage risk. Given the cards that you're dealt, you can set yourself up for potentially making money if it works out and damage control if it doesn't. Does that make sense? I hope that analogy stuck with someone because that is probably the closest one I can think of. Thank you so much. Another 499 pounds there. Only asked as I see the Aussie is looking to raise interest rates. Yes. So again, to kind of reiterate, I'm with you. I like the Australian dollar long. Edgefinder's got a great reading, and I'm totally on the same page with you. I like the Australian dollar long. I'm just kind of pointing out like we can all kind of have this setup in mind and think like this is great. We just don't know the certainty of the outcome. But I do think personally, the Australian dollar has a good shot at making a run to the upside and keeping up the momentum that it's had. If something changes, like good poker players, our goal is to try and minimize damage on it. Nick, what do you think about cash secured puts on Visa? So I bought some shares of Visa. I'm still long my position. Ray Beast, I don't know if you're inside of the Discord or not. Maybe you are. I just don't recognize your handle. But we've been doing several different long stock positions as well as short cash secured put positions as well. So if you are in there, then keep an eye on that. But I already own shares of Visa. I actually got assigned. I can't remember. No, I know. I just bought shares outright and sold a covered call, and I recently bought back the short call position. So I'm just long shares of Visa right now. Cheryl's has got it. You can control your risk. That is it, right? You can't control what the Aussie does. You can't control what gold does. You can't control what oil does. You don't know with certainty where it's going next. And the second you start catching yourself thinking it's got to do this, or it has to move this way, or it's definitely going to do this, pause. No, you do not know. You never know in markets. The sooner you embrace that, the better off you'll be, because we don't know where markets are going to go. We make educated guesses and we manage risk. That's it. Stock market opens up here in about 10 minutes or so. VIX is still plummeting lower. Volatility continues to grind down. If you are short puts, if you are really short options in general, this has probably been a pretty decent week for you, because of course, a lot of premium coming out of those options is good when you're short options. Now, if you're long puts, if you're long, options in general, it's probably been a more painful week, right? That's how that works. If the VIX is rising, just generally speaking, options are going to appreciate in premium value and vice versa. So let's also take a look at the dollar. Dollar index is smack dab right back down into this area, this 98 level. I do want to take a look at dollar because dollar is getting some stronger readings here, or trying to peak up into stronger reading territory. Getting a bearish reading on the technicals, though, due to technicals flipping more to the downside in regards to the 4-hour and daily chart trend. Neutral reading on inflation, economic data kind of leaning strong for the dollar. We had more good jobs data this week. The weekly jobless claims came in really good. So that was dollar bullish. The fundamentals for dollar do continue to look strong. I'd be interested in potentially watching for some strength to come back into the DXY. If you start to see this thing actually, put in some higher lows, put in some higher highs. I do like the dollar long side. Just waiting for the technicals to kind of agree with that thought process. But again, you had, in terms of the jobs data, very solid stuff on the US front. Weekly jobless claims, 189. That's the lowest that we've had in a very long time. So the case for rapid rate cuts just has dissipated, which was a big part of the bear case that got us down into the 96 territory. You had a big surprise to the downside. If we recall, when we went down to, where do we go? Went 96, right? 95.75 or so. This low, we were real worried about, the jobs market is collapsing, rate cuts galore, inflation is cooling. And then we had the right there around where, Kevin Warsh gets nominated, new Fed chair, inflation starts to uptick, jobs data holding a little bit better. All of that takes us from wherever we were, 96 up to 100.5 real quick. So we're kind of stuck in the middle. I do like fundamentally the dollar more to the upside. I think on a relative basis, the US has more growth than the rest of the world. Jobs data is coming in reasonably hawkish or strong. I think that the new Fed chair is likely to be more hawkish than people are anticipating him to be. And so I think that combination leans towards more upside in the dollar. However, I don't have any trades on right now for the dollar. As far as I don't have any dollar trades. So I'm just kind of on the sidelines with it for now. The chart has been really choppy. So I'm looking for maybe a break to the upside on this. If this takes place, right, then I'd probably be interested in things like short Kiwi dollar. But I'll keep an eye on it. So we'll see. We will see. Oil's moving lower on me. I am just going to hold on to this trade. If this breaks through let's call it 100 back down below on WTI, US oil, then I will probably just hop out of this for a loss. But I am looking for, and if that happens, I've mentioned when I made this trade alert, it's a bit of a hedge in the portfolio because I am long a lot of stocks. So I'm sitting in a lot of long stock positions. This is a bit of a hedge in case there's geopolitical tension that starts to, take place again. My stock positions will move lower, but my oil trade could do well, and vice versa. If oil drops hard, my stock long positions will look really good, most likely. Because this is one thing that I will say that has been pretty baffling about the markets, the stock market. It's been very, very impressive that Nasdaq, S&P 500. If you had told me a couple months ago that the stock market would be pushing through all-time highs, given that we doubled in oil price, I'd say you're crazy. So it's been really impressive, but it is really truly the excitement around data center build-outs just exploding. I mean, look no further than, as we've been saying over and over on the channel, look no further than semiconductors. This explosive rally from the April lows of 40% in the SMH ETF, which tracks a whole bunch of, semiconductor stocks. That monster Ripperooski rally is this isn't happening for no reason. The reason is there's a lot of AI related revenue that some of the big giants that are spending all this money on data centers are experiencing. They reiterated growth in that department during their recent earnings releases. Google, massive AI revenue growth. Anthropic is seeing massive adoption of their platform. So anyways, you have all this AI related revenue that is expanding. And what does that do? Well, those big companies reiterated that they're going to continue to pour money into investment into AI. What does that mean? Buying chips, building data centers. That is a space race level kind of build out in the economy. It's a massive stimulant. So the stock market's saying, who needs rate cuts? The Magnificent Seven are the rate cuts that we needed. They are pumping money into the system. They are, industrial stocks are up because of it. Utility stocks, the power companies, right? All these sorts of basic materials, all these different companies, energy companies, like they are benefiting from the data center build out. It is an economic, you can call it an AI bubble, and I think it probably is in the very long term. But in the meantime, it's more of an AI boom, right? The stock market is rallying on the idea that productivity, economic growth is just explosive and looks really strong. By the way, that's strong for the dollar too. Strong, US centric economic growth is also strong for the dollar. So there's a couple things at play here. That also makes me less attracted to gold. This is why I say markets are all connected. Gold looks less attractive if there's this excitement and enthusiasm around economic growth that is coming out of, the AI build out. So I kind of lean a little bit more strong dollar, strong tech stocks. Yields, I think, are going to stay elevated because I think inflation could stay sticky. And that keeps rates down. That keeps rates up, bonds down, and gold kind of floundering. So that's my outlook right now in markets. I think I'm not really willing to short gold as far as I last checked. Let me just see. Yeah, I mean, when we look at gold, fundamentals look not great for gold. You have strong economic readings in the form of decent jobs data. Economic growth figures are reporting reasonably strong. GDP growth was a little weaker than expected. Manufacturing PMIs better than expected. Services PMIs slightly worse than expected. Retail sales very strong. Consumer confidence beat estimates as well. So overall, you may be hearing that I'm pretty bullish on markets, and that is true. But there is a clarification that I keep coming back to with this. I'm not chasing it. I own stocks that I bought during the Iran stuff when we had all the worries. I thought there was some great value out there. I bought some individual stocks, but I am still sitting, admittedly, on more cash in my portfolio than I wish I was. I wish I had bought more, right? There's that I shoulda, coulda, wish I did this, kind of mentality that you have to be careful of. So what am I doing in the meantime? I'm waiting constructively for pullbacks. I still like the story. I'm a buyer of dips if you get them, but that's if you get them, and you might not. Do I want to short this? No, because I think stocks are going to keep going higher. And if they don't, what if I'm wrong? What if I'm completely wrong? That's the next question you always have to ask yourself when you have a theory. Then we stop out. We manage risk. We don't go all in. No leverage. No, full port out of the money call options on Nasdaq. That's not what I'm in any way doing with my own portfolio. I'm buying quality companies when they go on sale. I'm buying the Nasdaq on pullbacks, index trades long. That's the trade that I still really like. So I love the story. I think the data center build out, the AI stuff is going to persist longer than people think it will, as it often does. Did you know, this is another one. One of the greatest booms in history was the railroad boom, and it lasted for 60 years. 60 years in the 1800s. At the time, the stock market was like all railroad stocks. So nowadays, right, we're like, oh, the stock market's all AI stocks. That's got to be a problem. 60 years, railroad stocks dominated and just kept going up and up and up and up and up. It was an absolute boom. Sure, there was crashes later, but 60 years of gains. So I'm not saying necessarily we're going to have 60 years of AI build out, but we could. Never say never, right? So again, it's the challenge. I think regardless of your opinion on the matter, whatever it is, the point is be acknowledging of your risk tolerance, what you want to do with it, and, make your own decisions. But generally speaking, booms can last long. Another bubble that kind of never popped was the iPhone. People said smartphones were a bubble. And guess what happened? They're still bubbling. Like, iPhone demand is still monstrous. Sure, there are many examples of bubbles that blew up. One of the biggest obvious ones is the dot-com bubble. The one strong difference, though, that you probably know it's coming from what I'm about to say, the big difference in the AI boom versus the internet bubble is that the internet wasn't built on any profits. Like, all these companies, the internet takeover in the 2000s, 1999, 2000, 2001, everybody was slapping .com at the end of their business, just like people are putting AI in their stuff now. The difference is AI is like generating massive profits for some of the big leaders within the space. Not just the semiconductors that are selling the picks and shovels, but we're seeing businesses that are adopting AI improve efficiency, etc. The difference is, like with the .com era, you had a bunch of companies that were tacking on .com. Not that I lived through this. I mean, I was a kid, but just studying your market history, everybody was slapping .com onto the end of their thing, but it wasn't in any way meaningfully more revenue. The price to earnings ratio on stuff during the .com era before the crash went unbelievable. Like, companies were making like pennies on the dollar versus what their valuations were, right? So do I think this is a bubble? Maybe, but I still think we could be earlier than people may be thinking. A lot of people think it's like the end, like we're on the cliff right now. My personal thought is, I think that there are, I don't believe in chasing rallies, but I do think pullbacks, if they take place, offer an opportunity, in my own personal opinion, trading account, etc., not financial advice. I think it's a good risk reward bet, but I don't think it's as attractive. I think from an active trader's perspective, there's less attractive, setups up in these areas than if we were to pull back. So we'll see how it all plays out, but we'll be here talking about it the whole way through. So if you enjoy my streams, make sure to hit that thumbs up button, subscribe, and don't go anywhere, because we've got more stuff coming your way. Hey, real quick, if you are interested in joining our free Discord, we recently launched a Discord where everybody can chat. We have a free chat available now. We'll drop a link here in the live stream chat. And to take advantage of that, you can come join us inside of the Discord. Also, we have not yet ended the sale. Yesterday was technically the last day, but if you are interested in getting access to Edgefinder or Stockbox, drop a link, or we'll drop a link here to where you can speak to our team if you want to get last seconds on the sale for our 40% off discount before our anniversary sale ends on Edgefinder and Stockbox. With that said, guys, up next, we have Forex James taking over the stream. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, hello, ladies and gentlemen. Happy Friday. Hope everyone is well. Hope you're all good. And most of all, I hope you all had a profitable week. So, position wise, I am personally completely flat. The only trade, I'm saying completely flat. The only trades I've got open, Aussie, New Zealand. Personally, we've also in my Discord, we've also got a Aussie Swiss position here as well. But yeah, that's it. I'm going to the weekend pretty light. I'm pretty relaxed actually. I do have a position. I've still got my position on SSLN, which for those of you who don't know, is basically the UK version of SLV. It's essentially the same thing. It's just priced in pounds rather than dollars. So I've got an average price here around 5.5, give or take. But yeah, this is more an investment, so don't take that one too literally. It's not a swing trade or anything like that. But yeah, Aussie New Zealand is absolutely fantastic. And I was having a conversation in my Discord today, basically about what kind of the reality of trading. And this doesn't apply to everyone, but this applies sort of more of a general statement or a more broad statement. So to give you some perspective, this month, or in the past 29 days, I had a long position on GBP AUD. That was a stop loss for 1%. USD CHF, stop loss for 1%. GBP CAD, stop loss 1%. New Zealand US dollar was break even. I showed you that. I should be showing you that trade over the past week or so. That was, again, no win, no loss. I mean, slight profit actually based on the swaps, but overall break even trade. A lot of the professional side of trading, when I say professional, again, I'm not trying to position myself as any like hierarchy, but the more professional traders I know, it's not a case of consistent wins. It's not a consistent 2% every week or consistent 3% every month. It's generally the majority of their gains are made from a handful of trades within a sea of losses throughout the year. And I think the Aussie New Zealand trade here is a fantastic example of that. So I've had 3 stop losses in a row and a break-even trade last month, actually, technically. But throughout the whole period, I've had this trade running. And I think, again, it's more just a display of how trading can work over a longer a period of time, as opposed to just isolating 1 week of losers or a month of losers. But yeah, I've got a bit more time today, so I'm going to ramble a little bit more than I normally would in my half-an-hour segments or 30-minute segments. But yeah, anyway, that's besides the point, I suppose. But yeah, Aussie New Zealand running absolutely fantastically. It seems to actually, let me just refresh my Edge Finder because I think it's been open for a while. I just want to make sure I've got the latest readings. AACH, good to see you. Let's go. Indeed, let's go. It's Friday. The sun is out. At least the sun is out here, which is nice. It's like the first time in a year. And I've got a cheeky beer next to me. Naveen, King Naveen. Cycling Club, what's good? Everything's good. Cannot complain. Milking Aussie New Zealand, absolutely. And this is what I mean. Put your foot on the gas when you've got a winner. I mean, obviously, again, more of a broad statement. Put your foot on the gas. Try and get as much as you can. That's my opinion. Some people, don't do that. Some people trail stops. Some people just let the trade run. I personally like to trail stops and scale in. and recycle risk essentially. So what I mean by that is this trade, let's just say 1% risk, then move to break even. Okay, well, maybe I don't want to risk the 1% I initially did. Maybe I want to risk 0.5 on this trade. So, worst case, maybe these two trades get stopped out with a trailing stop on the first position, second position, maybe it's stopped out with a full stop. Okay, might come out with maybe 0.5% or break even. Second position here, third position, same thing. Maybe I don't want to risk the whole thing or all of the profits I've made so far. Maybe I want to risk 0.25% or 0.5%. And you can start compounding quite nicely when you do that. I mean, again, it can be very, very, very dangerous if you don't do it properly. If you're leaving all your stop losses open, you're taking 2 to 5% risk on every trade and so on and so on. It can get very dangerous, and it can be, it can turn into a massive loser if it doesn't work out. But if you can scale into positions in a way that keeps you safe, but also maximizes upside and minimizes downside, and you're in line with the Edge Finder, shout out the Edge Finder, use code ELITE for a discount. It can be absolutely fantastic. But yeah, this is kind of the only trade I've got. As I said, Aussie Swiss is open, but I personally didn't take it, unfortunately. Anyway, let's move on. So Aussie New Zealand actually seems to have dropped off the Edge Finder, which might be my signal to get out. Now I'm just assessing. So let's see. So what have we got here? So daily looks okay. Now, what we also need to think about is we've just started a new month. Now, that's not a huge deal, but it is something I like to think about. So what we could potentially see, now the Aussie New Zealand's dropped off the Edge Finder, we could end up forming a larger downside monthly wick before we continue higher. So I may consider cutting this position actually and just realizing the profit that I've made and calling it today and maybe repositioning next week. Because if we look at the H4 here, it is not showing much follow through. So we broke these previous highs here, created a new high. But if we just do a bit more micro analysis on these H4 candles, we're seeing quite strong wicks to the upside. Not really any buying pressure whatsoever. We're not going and rallying to new highs. We're not really doing anything. And then if we account for what I've been saying over the past couple of weeks, which is that the Australian dollar, in my view, is overcrowded on a COT basis and it's very stretched on a technical basis, do I want to stay in this position? Not really. Maybe I want to go into the weekend flat with a clear mind, realize the profits, and start May with basically an empty portfolio. That is an option. In ES longs, let's have a look at ES or S&P in my case. Yeah, I mean, it's continuing higher. I bought a little bit more this morning on my investment account, but I think there's two views. I mean, I think Nick said it quite well, that, there are people making comparisons to the dot-com bubble. I am one of those people. I have compared the current situation to the dot-com bubble. And I wouldn't say it's wrong, but it might be very early, or yes, maybe it is wrong. I'm not willing to be a buyer at new all-time highs. I think that for the way I trade, for my philosophy and style, it just doesn't make sense. So there's a few ways we could go about this as a swing trading approach. We could either look to have a retest of these previous highs over here. If we see a really nice rejection, continue higher, then that would be a good buying opportunity in my opinion, because that would also very likely come and meet this 200 H4 moving average. On the other hand, if I follow my trading style a bit more strictly, take the fib from the low to the high. Of course, the high could be anywhere. I don't really know where the high will be printed yet. We could be looking for more of a 50% retracement. In that case, we'd have to go up timeframes and look more at a daily timeframe. Excuse me. That would also line up quite nicely with previous support over here. So again, there's a few options, and I'm not saying that I am a bear right now. I think there are definitely a few red flags that are coming up. But yeah, I think they're more long-term things. So not tomorrow, not next week, more 6 months, 8 months, 12 months, even 18 months potentially. So basically where the ideas come from is the checklist, and I for the life of me cannot think off the top of my head where it was from. It was from someone relatively credible. If anyone can find it, feel free to let me know. But it's basically a checklist of the .com bubble, and we're approaching a very similar thing with the AI situation. So we've got the markets that have gone or front run risk off when obviously the Middle East situation at the time down here wasn't resolved. We didn't have really anything for the S&P to rally off. We had inflation expectations up. We had developed market central banks more on a holding aspect, maybe even hawkish, depending on which ones you're looking at. And we also have, SpaceX, OpenAI, Anthropic, IPOs coming, again, front running those things, which rarely happens in the stock market, as far as I'm aware. Again, I'm not a stock trader, could be wrong, but as far as I'm aware, that doesn't normally happen with these types of things. The markets normally wait for those companies to prove themselves, and then something happens. So there's a couple of red flags that I'm seeing, and that's only a sort of a drop in the water. But anyway, we're not going to go into that too much today, unless anyone specifically wants me to. But first, we'll go over some trade ideas. So as I said, S&P longs, I think if we're keeping it very simple and not going to deep dive into, the more skeptical side of things, I think it's fine. So the Edge Finder is given a very bullish reading of 9. Obviously, we're in a bullish trend. I don't think anyone could deny that. And we do have some areas to potentially buy from. So I think longs are fine. But again, as I said, I would be a little bit cautious. Dow, similar thing. Oil's getting a bullish reading as well, which is interesting. I know oil's had an absolutely fantastic run over the past couple of days. So let's take a look there. I'm saying that it's actually the daily's looking a little bit bearish right now. These two previous daily candles, or sorry, the previous daily candle and the current one. So I think what we might be able to do is, yes, look for a long position, but so let's just see where. So what we've got, Edge Finder bullish reading, really nice bullish trend. We're having a reasonable pullback. I would consider this as reasonable. And the reason I'm saying it's reasonable is because we were quite extended at this point. We had the RSI overbought. We were quite deviated from our 200 H4 moving average. I think a pullback naturally was kind of due. So we could be looking at a fib. Again, this is more discretionary approach, but either the fib from this low or the low down here, depending on how you draw them. The reason I quite like this level to potentially buy from is because it lines up with this previous high over here. So we've got a little bit of structure. So that just provides that break and retest pattern that I quite like to use. And then, excuse me, we could be looking to just trade into sort of the fib extension. So maybe a trade like this is actually not a bad idea. Obviously, there is a little bit of nuance, a little bit of context behind this one. You've got to obviously understand the situation with the Strait of Hormuz, and you've got to then also kind of just hope that we don't get massive de-escalations over the weekend. It wouldn't be a huge surprise if we do. We don't. Maybe the opposite happens. It's Trump. Who knows? So that is, of course, something you'd need to keep in mind. Been 6 months of AUD strength and still on. Yes, the Australian dollar has been absolutely beautiful. It's one of those things. I think we'll go into 2027 and we'll look back and say, do you remember that Aussie dollar rally? And we'll be like, yes, that was the one. Normally, and this is just through my experience, but normally I'll find one theme and that will be the theme of the year. So it might end, next month, but that will be what I look at for, in a year's time and look back and say, that was beautiful. Oh, it's not dropped off. Something needs fixing on the Edge Finder, does it? Let's just double check because I don't want to sit here and give false information. So let's verify. I know the same thing happened with New Zealand dollar. So yeah, maybe it seems like it might just be a little bit of a bug. So yeah, what I said about Aussie New Zealand not being on the Edge Finder may have been incorrect. Yeah, I mean, look at that, bullish. Okay, well, I take back what I said. The Edge Finder is, despite the null reading here, the Edge Finder is still bullish. So that is a great tick in the box. I want to buy USD JPY from MOF. Okay, let's have a look. I'm just going to delete that. Yeah. So I was saying yesterday that I wouldn't be opposed to being a buyer, but what I also said yesterday is that it seems like a buyer's trap, and that was at this point. So I was actually, in hindsight, actually relatively spot on. So what we often have with these types of moves is, this isn't market mechanics. This is more just from my view of things. When we have these types of aggressive moves in the market, where it's a case of retail will generally, you can see it and you can say, retail are probably going to want to buy that back up, or retail are probably thinking this. And normally it's quite easy to spot that type of thing. And yesterday I was saying retail very likely are going to be piling in longs here. And, you know, for any traders that have been in the markets for a couple of years, have probably been at that point where they see a large move and they say, oh, it's got to come back, or it's got to fill this gap, or whatever it may be. And they'll pile in, and then it just continues lower, which is kind of what we had. We didn't, you know, obviously we didn't rally lower, but we did create sort of a little bit of a new low here. So it might be potentially a good idea to be a buyer if you are bullish on dollar yen. I am bullish on dollar yen, but I'm not bullish enough to warrant me buying just yet. I think I'd rather wait for Monday or Tuesday and just see, how does today's daily candle close? Maybe how does Monday's candle close? And then, yeah, maybe there's an idea of being a buyer there. Because if we look at this daily, we are still in a very nice bullish trend. Technically, this looks like a very clean sort of pullback. So if we look here, really aggressive move to the downside towards this 200 daily moving average, and it just gets bought back right back up. A little bit more of a sell-off, and again, 200 daily moving average, bought right back up. Now we've done the same thing. Are we just going to come right back up? It's possible, and I think that is the base case, but I'm not confident enough to put money on that idea just yet. Bashi, I've just seen you. How you doing, my friend? London was laughable. What do you mean, Bashi? Hello. Am I late? I am late. Did I miss anything important? I don't know. I don't think so. I mean, it's a pretty chill Friday, I think. Nasdaq ripping to the moon. Let's have a look. Yeah, it's definitely a very good period for these indices. Actually, you know what? I just want to do a little bit of a checkup. Okay. Excuse me. So I bought Microsoft roughly around here. I can't remember the exact price. It was roughly around this area. I was just going to see if it ended up coming back to this high, which is kind of what I wanted it to do. That was kind of my take profit, which it hasn't done. I ended up cutting it here. So I really didn't take much off the table in terms of, I didn't make really anything off it. But yeah, I was just curious what it had done since, seeing as we've got the S&P and the Nasdaq rallying. NZD USD just bounced previous daily high, previous weekly high. Yeah, I mean, I'm definitely not pessimistic about this market. I absolutely think we can come towards, let's say 1.245 to 1.25. That's kind of my zone where I'm happy to, if we start seeing a slowdown or we see the edge finder start degrading the bullish reading, I'll happily just take profits at that point. But I am very, very confident we can see those levels get hit. Doesn't mean it will happen, but my confidence is quite high. Bernard, hello. Yen did another move. Yeah. I mean, I took a bit of a loss on that move. I forgot to mention that. Actually, no, I think I did say yesterday. Yeah, I was in a Swiss yen long when that happened, and it came to the charts, and I was like, "Oh my god, it's whatever." I had to just eat the loss. There's nothing I could do on that. So it is what it is. It's funny because I always say the yen is the one currency, or the one sort of G10 currency that I just seem to always get wrong. You know, like Aussie, New Zealand, fine. Euro dollar, fine. Dollar yen, Swiss yen, CAD yen. The yen pairs, I just can never seem to get in at the right time. It's so frustrating, but it is what it is. Guys, fun fact: Volkswagen 2008 price. It's just greatest short squeeze. Yeah, I know there was some. I don't know if this is what you're talking about, but I was watching I quite like watching sort of the trading documentaries where it's like it's just YouTube videos where they talk about historical trading events where I think Porsche did some sort of takeover of what it might be Volkswagen. I can't remember who. I'm not really a car guy. And they did some sort of market manipulation where they didn't disclose their positions, and the stock rallied while everyone was short or something like that. Yeah, crazy stuff. I would check Volkswagen, but I have no idea what the ticker is. What's your view on euro dollar? Let's see. So Eurodollar is not getting an edge finder reading, so automatically I am sitting neutral. Bounce off the 200 on the H4. RSI a little bit overbought here. What else do we have? Let's see. So daily. Daily's bullish. Weekly is bullish as well. What about the H1? So all time frames are bullish. H1's just flipped bullish as well. So I think on a technical basis only, buys do make a little bit more sense than sells. However, to counter that point, we are still in this sort of monthly downtrend. We don't have a reading on the edge finder. So there are those minor things. So I just don't really have much for you, unfortunately. I think there's more of a case to be a buyer than a seller, but I also don't feel comfortable with that. Oh, it is that one you're talking about, Ray. Okay, I see. Yeah, Max. When it comes to the yen, I think yeah, counter trade me is maybe the right idea. I hate to say that; it's a little bit of a hit to my ego, but yeah, it is what it is. I'm long hold. You're long on what, euro dollar? VOW. Let's have a quick look then. So you're talking about 2008. Oh yeah, over here. Yeah, this was it. Yeah, I think. Again, I'm saying that like I have any idea. I really don't. But yeah, I know there was a huge short squeeze, but then obviously you get to 2008 and the global stock market took a hit anyway. So I don't feel qualified to give much of a view, to be honest with you. There was a one in London. Well, I'm not sure what you're talking about, Bashi, unless you're talking to someone else. Okay, so let's have a quick look at gold, which actually seems to be having a pretty good couple of hours here. Although I wouldn't trust this. I still would say gold is a valid short. Yesterday's daily candle is quite bullish, but again, just relating back to what we've been saying, where's my my yields have disappeared. That's annoying. Anyway, yields have been going up, which is obviously why gold has been so suppressed. But with the dollar down, gold is going up. Yields seem to have had a little bit of a cool down as well. And of course, we had the MOF situation where the yen strengthened, the dollar weakened. So yes, gold had a period where it was positioned to do quite well. I don't think that's going to be a sustained theme unless we do get an absolute de-escalation in the Middle East. I think as long as that situation is going on or we're getting escalations, we're going to see gold stay under pressure a little bit, especially as central banks aren't quite as dovish as they once were. Could I shed some light on pound Swiss? Yeah, you might not like what I've got to say about pound Swiss, but yeah, I can definitely cover it. Today's London session, yen did another drop. Yes, it did. Bitcoin is skyrocketing in a 3.3% move. We can have a look at Bitcoin in a second. Yeah, so when it comes to pound Swiss, I'm fairly sure the edge finder is bullish, or it was. Yeah, so pound Swiss is getting a bullish reading. And by no means is that wrong. I mean, obviously, pound Swiss has had a pretty good move to the upside. The problem is for the way I trade, which is very heavily dependent on the trend and pullbacks, but I have to see the trend first. So it doesn't matter what the edge finder is saying. If the trend isn't there, I can't take the trade unless there is something super, super convincing. But with pound Swiss, there isn't. So monthly is very bearish. Weekly is very bearish. Daily is bearish, and we've just rejected the 200 daily moving average. The H4 is bullish, but with the monthly, the weekly, and the daily being in such strong bearish trends, I cannot justify being a short seller. Being a buyer. We do have a gap here, which could be a short-term target for some intraday traders or some short-term swing traders. That's an idea. But I think the approach I'm taking here with Pound Swiss is more of a timing situation. So I'm going to let the bullish reading play out. I'll let the market do whatever it is it needs to do. And then I'll wait for the fundamentals to flip either neutral or bearish. And then I could warrant being a short seller because we've had the upside move, the edge finder will have flipped, and the trends are still intact. That's the way I quite like it. The other thing to discuss when it comes to that is the swaps. So being a buyer of Pound Swiss is quite beneficial. The swaps are positive, so that's fine. Being a short seller can be quite expensive. So you kind of have to get the timing right on Pound Swiss, or if you go in a position on Pound Swiss where you're just stuck in a range bound trade, you're going to lose a lot of money just on swaps. I experienced that in a very painful lesson. I can't remember. It was maybe earlier this year or later last year. I can't remember. But yeah, I was short Pound Swiss quite heavily. And I just had to realize the loss because the swaps were just getting too much. I ended up in, excuse me, I ended up losing about 0.5% of my capital just from swaps, not from the trade itself. So that's something else to keep in mind when it comes to this market. Okay, let's have a look at Bitcoin. Yeah, so Bitcoin is having a pretty nice move to the upside. So there's two sides of me in this market. There's the optimistic, keep it simple, technical side of James. So Bitcoin's getting a bullish reading, fine. The trend looks good on this weekly time frame. We bounced off structure. It looks good to continue higher. But I don't know, I'm just getting a weird feeling that this isn't going to be a situation where we start rallying to new all-time highs. And as I always say, I feel like it's important to disclose I'm not a Bitcoin trader. I don't really know much about crypto, so I don't want to sit here and start preaching and saying things that might, that aren't relevant. But the daily is still bearish. I am still in the mindset that we're not going to see, that we are going to see some type of stock market crash within the next, 8, 12, 24 months, give or take. I know obviously that's a very long period of time. So, I don't want to sit here and call a crash and then 2 years later say, oh, I was right. But I do think there are problems. And as we know, Bitcoin is quite closely tracking sort of the Nasdaq in certain situations. So I am not happy to sit here and say Bitcoin's rallying to new all-time highs yet. There are still areas that could position as problems, like the current level here could very easily turn into a resistance before we continue lower. If it's not this one, it could be here. And this also lines up here with the 50 weekly moving average. Now, of course, again, I don't know, but I don't feel overly confident in Bitcoin at the moment. My YouTube channel has just been dropped in the chat. Please drop a subscribe if you're enjoying my segment. I do appreciate it. I'm trying my best to get to 5,000 subscribers, which would mean a lot. I think that's about 1% of what TradingNic's channel has. So if you guys could drop me a solid favor, that would be appreciated. So I don't think there's really anything on my watch list at all. I mean, there is actually, that's a lie, but there's nothing I'm really bothered about getting into. I'm a little bit annoyed about this pound dollar trade. I marked this up, but I was also short on New Zealand dollar at the time. And I don't really like to go long and short on the same asset. I'm not really a hedging trader. If I've got an idea, I'll trade the idea. I'm not bothered about trying to hedge off the risk. That's not my style. So I didn't really want to take this pound dollar, but in hindsight, it was great. I mean, it was the stars aligned at the time when I was marking. So pound dollar was getting a bullish reading. It doesn't seem to be anymore. But then we also look at the daily time frame. Oh, sorry, not the daily, the H4 time frame here. Bullish trend came to the 200 moving average, also sort of respecting this fib zone with previous highs over here. So it was fine. There was no reason for me to not take it other than my own personal whatever you want to call it, restrictions, if you will. So I shot myself in the foot a little bit. So yeah, I'm a bit annoyed about that one, but there's nothing I can do about it. Aussie yen seems to be having quite a nice recovery. Not a massive surprise. As I said yesterday, the yen is still weak. Doesn't matter about the intervention. It's still a weak currency. It's still a funding currency. The Australian dollar still absolutely dominant. So yeah, not surprising at all that we're starting to see a recovery in this market. Euro Aussie is continuing lower. We are still getting this bearish reading on the edge finder as well, so it kind of makes sense. Fundamentals are aligned, but as I keep reiterating, I'm just a little bit cautious. So I think the best sort of analogy I can think of when it comes to the Australian dollar right now is like an elastic band. So the more stretched, or the more you stretch an elastic band, the less it takes to snap. And it's becoming, I'm feeling like that's the same situation with the Australian dollar now. It's getting stretched, and it has been crowded, it has been stretched, and it is in that situation right now. So the more that continues, the less it's going to take for us to see that sort of snap, or that sort of mean reversion correction, if you will, or the repricing, whatever you want to call it. So that's something that's a little bit concerning to me. But again, if we're going to just ignore the whatever you want to, what's the right word, the the sentiment or my personal bias, I think is the right way of saying it, and we just pay attention to the edge finder, the trend, shorts still, yeah, completely fine. Euro pound, absolutely my number one enemy. Yeah, I hate this market. I hate it. So some of you may remember we were looking to go short here. So we were looking for price to, actually, I think my entry was a little bit higher than this 50%, but we were basically looking for a retracement back into these lows to provide this break and retest pattern. We didn't get that, so I didn't get my entry, and now the market has been selling off. So I've completely missed the move. I was right in the direction. The entry was so close, and it just didn't get triggered. So now I'm triggered. But yeah, I think the plan now for this market is basically the same thing. Essentially, fib from the high to the low, pull back into these previous lows over here. That would again break, retest, and then continuation lower. If that happens, great. If not, then I'm going to be very unhappy. But yeah, we'll see. We'll see what happens next week. Need to stop eating food. I've heard Ozempic's pretty good for that. At least that's what the celebrities are saying. Euro pound, yeah, I don't want to talk about this. I don't want to talk about Euro pound right now. It's ruining my day. I go gym every 7 days, no skipping. Yeah, me too. Okay, I don't think we've got really anything else specific to talk about. Silver, actually, I've just noticed silver's on here with the bearish reading, which is interesting. So let's see. Maybe, actually, let's see. Let's just, before I jump to conclusions. Yeah, maybe. I mean, this isn't perfect, but the markets are never going to be perfect. There is this idea, and it's obviously upon a very quick look. So silver's obviously having upside today. We can now come into the H4 200 moving average, which is very close to the 50% retracement level. Also lines up with a low over here and highs over here. Maybe this could be sort of the retest before we continue lower. I don't mind that. And we've also got the RSI that's becoming a little bit overbought. The only other thing that I should probably disclose, I don't really want to short silver. I'm still very bullish on silver long term. But the good thing is I am long on silver technically here with physical silver. So I could hedge off. I know earlier I said I'm not really a hedging trader, but because that's a long-term investment, I don't mind taking a short-term trade to sort of offset temporary drawdown on an investment. There is an idea of being potentially a short seller, something like this, maybe. But again, I'm not overly convinced on that. So I think I would also wait for this one on Monday or Tuesday and just see how today's daily candle closes, see how Monday develops, and then maybe I could make a more informed decision. I'm a dummy. I'm fat like you. How dare you? I wouldn't say I'm fat. I think I'm on the upper side of a little bit chubby. You know, excuse me. It's sad. I was on a very strict calorie deficit a couple of weeks ago, I'd say. The problem is it was too strict. I started getting lightheaded. I was really struggling to focus on anything. So I loosened it, but I loosened it far too much. I just fell back into my old habits. So yeah, not good. Anyway, we're not here to talk about my diet. We're here to talk about markets. So I think oil is good. I am really actually liking oil. I'm going to see if we can get an H4 bullish candle close from this level. I'll attempt a small long position, very likely. When I say small, I think I'd probably half my normal risk. So I would take 0.5 to 1%. Normally I risk 2% on average. So what 0.5 to 2% risk depends on how the candle closes and so on. So that is an idea. I'm actually going to set an alert here, just so if it does close bullish, I'll get notified and I can look to take the trade. So let's just move it up slightly there. And I'll add that to my watch list. Cool, good stuff. As I said, I don't think there's too much else on my list that I need to talk about. Nasdaq, Russell, Bitcoin, S&P 500 down. So yeah, US markets are getting a nice bullish reading. Excuse me. However, China 50 is getting a bearish reading. So let's have a little inspect. That doesn't seem to be playing out. So, I mean, as a general rule, I don't short indices anyway, unless I've got a very specific reason. So I wouldn't go short on this market anyway. However, it's interesting. So I think China 50 may be a complete miss because obviously we're getting a bearish reading. The market is clearly very bullish. So skip that one. I think focus, would move to US markets. So Russell, Dow, S&P, and that's where the focus would be. Yeah, it's a little bit frustrating because there is nothing to do here. I can't sell it. I can't buy it. So I have to sit on the sidelines. Plump. Yeah. All right. I'll tell you what, Bash, let's meet in the middle ground. We'll say plump. ES score for UJ and GJ. Okay, let's have a look. Where is UJ? Oh, let's just type. Oh, it's there. Never mind, I'm being stupid. So it is getting a bullish reading of 3. Oh, well, sorry, a neutral reading, a positive 3, which technically is a bullish reading, but of course not really. So technicals bullish, technicals bearish, institutional activity is bullish, economic growth is bearish, and jobs market is bullish. So on a fundamental side, there's not really much there. However, of course, if you count in the fact that it's a good carry trade market, I think it is still a good buy position. And then pound yen, I think I might be going blind. I can't see. I'm really struggling to find anything today. So pound yen's getting a -1. So out of the two, I would want to buy dollar yen. However, I don't actually think I'd want to buy either. Not sure if that made sense. But yeah. GPCHF score. Yeah, I mean, we've discussed pound Swiss, so I won't do it too much again. Pound Swiss is getting a very bullish reading of 9. The downside, I don't have it on here. Hold on. The downside of pound Swiss is the trends. So monthly is bearish, weekly is bearish, daily is bearish, and we just bounced off this daily 200 moving average. I can't warrant taking a trade because the higher timeframes are so bearish. I think if you are looking to be a buyer, I would take more of an intraday short-term swing trade approach into this gap, and then I would maybe call it a day. Just because, I mean, it's just not a market that favors buyers. I mean, you would get paid swaps, which is good, but it's just a very difficult market, really, to be a buyer of, generally speaking. James, you know Goldman never lost on a trading desk. What do you mean, Ray? Do you mean they've never had a losing year, or what do you mean? Because they've absolutely lost trades. I track the institutional trades, and some of them very questionable at times. Do I have positions on stocks? No, I do not. Football. The only position I've got that's not on FX is on SSLN, which is basically SLV, but for UK clients. GBP CAD looks like it's finally breaking out. Let's see. I haven't really looked at pound CAD. Oh yeah, it's having a nice move actually. Let's just see. Tell you what, let's just keep it easy and let's compare crude. Oh, that's not being very useful at all, has it? All right, let's get rid of that. But crude is down, is what I was trying to show you. So crude's down. Obviously, pound CAD's up. We're seeing weakness within the Canadian dollar as crude is depreciating in value. It makes sense. And we are seeing a positive sentiment for sterling at the moment. So, yeah, I mean, it's not a huge surprise in my book. But again, as I've been saying regarding the Canadian dollar and oil, it's all very, very dependent on headlines. So personally, I don't like to be subject to that. Obviously, any trade can be, but, if I can actively avoid it as much as possible, I will do, because essentially, especially with Trump, it's more of a coin flip, in my opinion. So yeah, it's not really for me at the minute. Never lost money? Yeah, I should hope not. The amount they pay their analysts and traders, it'd be very disappointing if they started losing their clients' money. I'm gonna leave you alone till next week. We have NFP. Hope BOJ calm down. Yeah, it'll be fine. I mean, this normally happens with an intervention. We see the rally to the downside. We see a little bit of consolidation. Now it just gets bought back up. So if you put yourself in the position of a trader who has large bankroll, would you want to sell dollar yen or would you want to be a buyer? Keep in mind, dollar yen is overall bullish. You get paid very nicely on swaps. Why would you really want to be a seller? Surely this would be more of an opportunity to be a buyer. With that said, that's obviously more of a longer term view. And again, you would need a bit more bankroll. Obviously, if you're trading with $500, that's not going to work. But I wouldn't really want to be selling, to be honest. I would more just want to wait for a good buying opportunity. So as I said earlier, could be when we reach this 200 moving average on the daily. Maybe I'm wrong and we end up breaking lower. Fine. Maybe we can go up to the weekly and start using this 200 moving average or the 50 moving average here. That's kind of my viewpoint. I'm not really interested in being a short seller. I just don't see the value in it. And I don't see a reason that anyone would really want to be that much of a seller unless, and the only thing that would break my view there is if the BOJ started hiking either by surprise or aggressively. Cut pound CAD, £400 floating. Very nice GTI. Congratulations. It's a nice way to end the week. Ian closes pound CAD longs on Wednesday. I'm sorry to hear that, Ian. I don't know what to trade anymore. I keep losing. Football, there is a simple solution. Buy the Edge Finder with code ELITE. It tells you what's bullish and what's bearish, and all you really need to do is look for an entry. And I know that sounded very marketing like. However, I'm actually not joking. So if you look at the majority of my positions, they are all in line with the Edge Finder. So Aussie Swiss, we were long, we got stopped on a trailing stop, we made profit. Bullish on the Edge Finder. Aussie New Zealand took this, bullish on the Edge Finder. Obviously, there's a whole array of different trades I've taken in the past that I've shown you all that are all based on the Edge Finder. So a big problem that retail have is they overanalyze. I'm saying retail like I'm not one of you. Obviously, I am, but they overanalyze everything. So it's like, oh, what's my daily bias, or what's the bias of the market? Just use a 200 moving average. It's not complex. Just put a moving average on your chart. That's your bias. It's so simple. Then you've got, again, buy. Well, the Edge Finder's, but the fundamentals are bullish. The trend is bullish. That's the bias. All you need to do is find the entry, which is very likely best to be on a pullback, because pullbacks are so simple. If you think about what a pullback actually is, when the market moves, people want to take the profits. When they take the profits, we have the pullback. On the pullback, other speculators view that as a value place to get back into the trend, or get back into the market, sorry, especially if the trend is still bullish, fundamentals are bullish, the swaps are good. It's, you know, people really overcomplicate trading on a technical level because they've never really understood, or they've never been taught, or they don't care about what's actually driving markets and why markets move. But if you take some time and actually learn about them, it really simplifies everything. And yes, you might have to spend 6 months or a year trying to understand these things and really get to grips on why the markets are actually moving and how they move and what other people see in the markets and why, you know, JP Morgan might want to buy or why Goldman Sachs might want to sell. You know, it generally does become quite simple. And I know, you know, I know maybe I'm saying that from a place of experience, but obviously I'm trying to simplify my experience to pass on to other traders that might be a bit newer. Because I know, trust me, I spent so long trading ridiculous technical stuff and it just never worked. And as soon as I took the time away from the markets and away from the technicals, I understand more about not just economics, but about the economy and all these types of things. It's like, okay, well, if I am in the UK and I can see everyone around me really struggling with energy bills and the NHS, you know, no one can get placed in the NHS and all these other things. And there's all these talks about a cost of living crisis and recession, all this type of stuff. Well, okay, I've got that personal experience now, or that personal connection with this economy, and I know for a fact it's not doing well. What does the data say? And I can then start applying that. And it goes down that rabbit hole when it comes to economics. And then once you understand your own economics, you can then start applying the same thought process to other economies, like, you know, the US or Canada and so on and so on. I know that was a big ramble for a very quick message. I do apologize, but I just think there's so much wrong misinformation and flat out lies. It becomes very, very difficult for people to actually be traders because they expect to look at an FVG or a trend line or, you know, whatever it may be, and then outperform people that are getting paid 6 figures a year to do this as a career with the best technology, the best information, the smartest minds on the planet. And you're sat trying to draw boxes and lines and expecting to do better than them. Bearing in mind, they do not, you know, 10, 20% a year is kind of their average, obviously across all of them. So I think it's important to have these types of conversations now and again where, you know, it might not be what you want to hear, but for the majority of people, it is what they need to hear. Technical analysis doesn't work. Well, I disagree. I think it does work, but you have to find something that is very specific. I think there are recurring patterns in the market for sure. I mean, like what I trade is break and retests. That's like the core thing. So, you know, in fact, Bitcoin's not a great example. What's a good example? Aussie, New Zealand. Let's just take this. So the technicals here, you know, in theory, if I didn't pay any attention to the edge finder or the fundamentals or central banks or anything like that, you know, the fib, oops, that's not what I want to do. The fib from low to high pullback, you know, retesting some previous structure on the left. Same thing over here, retesting some of these low, oh, that's a really bad box. Retesting some of these lows over here. Same thing here, we come down, retest some of these highs. These are all, it's all technicals. It does work, but again, it's about being able to add your own filters, your own confluences, and those types of things. In my book, or in my case, those confluences are fundamentals, which just make everything so much more simple. Because, you know, that is what moves the market in a certain direction. So I don't need to sit and decode the markets or try and understand a crazy algorithm or anything like that. I just look at, okay, one economy is doing better than the other economy. Okay, probably, you know, most likely scenario, I want to buy or sell. Anyway, we're going to move on because I could talk about this topic for ages. And I have also realized that I am on a bit of a time limit still, even though I've got a longer segment than I normally do. Let's just double check. So 10 minutes, and then you have the real Chris Pulver coming on, not the fake one, the real Chris Pulver. Yeah, Ian's got it. Well, obviously not got it right necessarily, but Ian has said exactly how I feel as well. Technicals for entry, fundamentals for direction. James, I was saying, I always say fundamentals are the driver of the market and technicals. Yeah, that's exactly it as well, Simo. Again, when I say these things, I'm talking broadly, you know, like Bashi, I'm fairly sure Bashi trades very similar to actually ICT concepts. I don't mean to offend you if you don't Bashi, but that's just from what I've seen and what I understand. I'm fairly sure Bashi's been funded quite nicely and got some payouts. I'm not saying it doesn't work, but I'm saying more this is a broad message for the masses of retail traders, especially the ones that are struggling. Chris is an amazing trader. He is, absolutely, yeah. I've been meaning to get some mentorship from Chris for options. I still haven't gotten around to that. Top 3 Forex pairs. That's not really a question, football, to be honest with you. There isn't a best pair. You know, it depends on what the fundamentals. Like right now, Aussie New Zealand is my best Forex pair. You know, next week it could be Euro dollar or it could be pound Swiss. I mean, probably not pound Swiss, but it could, do you get what I'm saying? It could be a whole array of the G10 currencies or currency pairs. So I don't want to sit here and tell you Euro dollar is the best pair because, you know, it's not. There is no best one. However, there are bad ones. So let me show you this. Dollar try. This is a bad market. You don't want to try and trade dollar try. In fact, I don't even think your broker would allow you to get into this market, let alone even list it. But there are bad markets that you don't want to trade, like emerging and exotics. For the majority of retail traders, the spreads and the costs are just going to be way too high, and likely the fills are going to be bad as well. So you want to avoid those markets. Generally speaking, just the G10s, G7s, G8 markets, you'll be fine. As you get more experience and things, yeah, sure, move to exotics and emergings. But anyway, we'll leave that there. Sorry, Bash, I didn't mean to offend you with that. I'm just fairly sure I saw you draw liquidity sweep, so I just assumed it was ICT. Yeah, Chris is a fund manager. Yeah, I mean, I think Chris is probably one of the best guests on the show, especially if you're, you know, on the more complex side of trading with options and that type of thing. I'll be honest, goes over my head completely, but that's why I'd be quite happy to take some mentorship from him. Anyway, let's just do a final checkup because I've got about 5 minutes left, give or take. So what do we have? Pound, very bullish. Bullish reading of +8. Australian dollar. So already pound Aussie off the table. We don't have another currency individual that's getting a bearish reading. So it's tricky because I'm actually going into the weekend with pretty much nothing. I've got really not any interest in the markets right now. I think, as I said, oil might be the best one that I can find. However, the caveat is that I need to see this candle close bullish. If it doesn't close bullish, then I'm going to go into the weekend with just the Aussie New Zealand trade. Euro pound, as I mean, we've already covered Euro pound, but I'm just so annoyed. It's just such a kick in the teeth. I had a pending order for what, 3 days, and then it comes within 2-3 pips of my entry, and then doesn't hit the entry, and then just rallies down. Yeah, I can sit and dwell. There's nothing I can do, but it's just, it's just unfortunate. So yeah, this is the plan at the moment. This could change, of course. Don't take this too literally. The markets can move on Monday, Tuesday when I'm not with you guys. But yeah, this is my idea at the moment. If we can see the market pull back into this fib zone, I'll be very, very happy to be a seller. And then, actually, let's talk about take profit. Where could we look to TP? There is a lot of room, actually. There is a large amount of space where we could look for that larger or the higher time frame mean reversion to play out. So just to quickly speed run this, Euro pound is a very correlated pair. You know, you've got Europe and obviously the UK. So this is inherently a market that does see mean reversions, and we haven't really had one for quite some time. We did have one over here, but this was a year ago. Since then, we've had really large upside and no downside, which again for this market is a little bit uncommon. So I wouldn't be surprised if we do over the next couple of months or maybe even a couple of weeks, we do see this market revert back down to these lows. I'm not saying, again, I want to clarify, it's not a fact. I don't know, but it wouldn't surprise me if we do come down to around, let's just, for the sake of round numbers, we'll say 0.825. So if we could position into a short at some point, there is a fantastic R&R to be had. The asymmetric risk, for me to sound all professional, is phenomenal. I love it. But again, it's just, can we get that entry? I took 4 or 5 positions last month. Yeah, I didn't really take too much last month. As I said, I took a pound Aussie. I did attempt a long on pound Aussie, didn't work out. Took a long on dollar Swiss, didn't work out. Took a long on pound CAD, didn't work out. And I got stopped on New Zealand US dollar for break even. So yeah, last month wasn't really that great for me. Did have some wins in there as well, of course, but yeah, generally speaking, it wasn't really anything to shout from the rooftops. But of course, Aussie New Zealand is my saving grace right now. I'm more of a quantitative trader learning econ metrics. Okay. Okay, fair enough. Yes, James. And you can hold longer because of positive swaps. Euro pound. Yeah. Took 2-3 trades in 1 week. It was sit for 3 weeks. 2 profitable, 1 L. Very nice. Well, Bash, I've seen your R&R, so I'm sure your 2 profitable trades were more than enough to to be satisfied for the week. Excuse me. So 3 minutes left, and then Chris Pulver is coming to take over the show. If there's any requests or questions in the meantime, let me know. If not, I'm sure I can ramble for another couple of minutes. I've just seen Euro Swiss is also getting a bullish reading along with Aussie US dollar. I don't really have any interest in those markets. Euro Swiss, yeah, there's not really. In fact, there is nothing. Look at the daily on that. That's not looking too great for me to be a buyer. Actually, we've rejected this daily 200 moving average twice now, as well as here. H4. We've also broken below this 200 moving average. This current H4 candle is also looking quite bearish. So I think I would give that one a miss. Then Aussie US dollar, it was bullish reading. Yeah, bullish reading. So this one's looking good. So how would I go about this is the question. Fib from low to high, wherever the high will be printed, 50% retracement. I think, yeah, this looks all right. It's not fantastic, but I can see the idea, I can see the vision. So change this to support. Yeah, maybe if we could get a retracement to 50%, I may attempt it. I don't mind it. Again, I'm still very bullish on the Aussie dollar, but as I've repeated multiple times, I'm cautious, a little bit worried, but it doesn't mean that I won't take any more longs if there's something great that pops up. So with the RSI becoming a little bit overbought here, a pullback seems reasonable. So yeah, maybe this is a play. So I'm going to add this to the watch list, and we'll see if we can get something on this one maybe next week. Quick look at pound Aussie. Any idea on US 30? Yeah, so all right, let's try and do this as quick as possible. So US 30 and the S&P is kind of the similar thing. I wouldn't want to be a buyer right here. So my only view really is waiting for another pullback, whether we, maybe see a double bottom here, or if we see a 50% retracement, something along these lines maybe would warrant a long position. However, I just don't see anything right now. It's a little bit too elevated. We've had already quite a large rally. So yeah, the only way I could leverage a position into here is on a reasonable pullback, which doesn't seem to be on the horizon right now. Someone else asked for pound Aussie. So the problem with pound Aussie is, although it looks good to be a short seller, all it takes is one quick look on the edge finder. We've got the pound that's bullish, and we've got the Australian dollar that's bullish. But we've also got the pound that is actually slightly more bullish than the Australian dollar by 1 point, or one, whatever you want to call it, by 1. So as far as I'm concerned, if you're trading pound Aussie right now, you're basically trading 2 strong currencies against each other, which in my opinion is kind of the opposite of what you want to do when you trade. You want to trade a strong versus a weak, not a strong versus another strong currency. I was told to trade one thing. I guess I was lost. Yeah, I don't know. That's a topic I don't have time to go into, unfortunately. Maybe Chris will touch on it with you, but it's my time to leave. We've got Chris Pulver coming to take over the show. Ladies and gentlemen, have a fantastic weekend. Thank you for having me. Stay safe. Don't get margin called, and I'll see you all next week.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hey everybody, happy Friday, May 1st. Let's have a look at everything. So I was just finishing up a live session. I was talking about this trade just a few minutes ago, and I think I'm ready to evaluate this one for a trade. Now, if anybody looks at the Aussie New Zealand with me, does anybody want to short the Aussie New Zealand? I mean, this thing has gone up from the lows of 1.06 all the way to 122. I'd love to short it. The problem that I have with shorting this is I think we're going to this breakout symmetry at 2,700, and I think shorting it is a little bit of a short-term guess. And yes, I do think the market can drop a couple hundred points, but I think the better trade is to dollar cost average long in this thing, trade small, and trade this thing to the breakout symmetry at 2,700. That's what I'm going to do right now. Okay, so as much as I want to short this on a rising wedge pattern, I think the easier trade is trade small. If we come back to the base of this wedge, trade again, and then space it out and buy this thing and hold this thing until we get the measure move at 2,700 and have this pay us, have this pay us, have this pay us if we have any pullbacks, and just stay with this longer term. Right now, I mean, it's rare that we've seen a swap that's positive on Aussie New Zealand, but we have a 4.1 Aussie bank rate versus a 2.25 Kiwi bank rate. I think that's why this market is finally ripping to the upside and going like this kind of inefficient trend. Oh crap, I just closed out my oh, you idiot. I just closed out a bunch of browsers. Give me a second. So I had that up. All right, let me check on a couple of trades here. I'm going to get that trade running for my OAN account. Get this ready to go, build this trade out. Okay, let me take a look at one quick trade this morning. So I have a little bear call spread and iron condor trade running for SPX. I need prices stay below 72.80 today. I'm also looking at a potential profit on XSP, which right now is up about 50 bucks. I'm going to close this thing down. I'm going to close this down for a winner. That gives me, actually, I'd love to see like more downside here. Oh, baby, just fall. Let fall nicely. This is getting better and better. There's about a $400 dead zone on this trade. If we get back to 71.30, 70.31 or 7.31, I'm going to take the profit here. This looks pretty darn good. Give me 80 bucks. That's not bad. I'll add that to my winnings on the day. So let's go 355. I got filled for 445 credit. 355. Oh, there we go. 350. Let's go, baby. 350 debit. 355. Give me about 90 bucks. It's getting a little slippery now. 360. All right. That's a quick winner. 445 minus 360. So I just grabbed 85 bucks there. I traded some earnings this week and had a nice little showing on earnings. I'll get back to this currency stuff in a second. This is going to be, look, I've got this video series on my YouTube channel. It's Keep It Seriously Simple or Trading 101. One of my favorite positions is, building off of pattern trades, low risk trading, low leverage trading, and adding to winning positions. What I'm going to treat this position like is I think that this is a long time breakout move, that we've had this range from basically parity 1.00 all the way to 1.14. So I am measuring this move all the way up to 27 or 2800. Okay. Now, we're clearly in a bit of a trend. If the market is treating this like this is an impulsive move to the upside and we have a little bit of a pause or pullback, I want to just scoop up some buy levels here and still continue to buy this thing all the way back down to like 114. So buy small, buy small, buy small, buy small. But I don't know if we get filled on all those levels. I think more than anything, we might just go sideways for a little bit and then continue up. Destination is 27 to 2800. Okay. And it's positive swap. So that's part of the reason I'm going to hold this trade. So I will get this trade up and running. I'm just making sure I'm managing some of those profits. I'm going to get a quick update out for daily profit. So I bought the 731 put and I sold the 740 put, 445 credit, close for 360 debit. All right, let's go back to this. So let's go Aussie, New Zealand. And I'm going to do this one like pretty methodically because I want to get this one out for pulver alerts. So again, this is kind of like the, institutional style of trading here versus, Chris, give me the take profit, give me the stop loss. I'm not going to trade that way. I'm going to trade really small and I'm going to scale myself into this trade. Okay. So what I'm going to do is I hate buying it right now. I really do, but I'm going to. So I'm going to buy it for basically like $1, $1.50, $2, $2.50. I'm going to scale myself into this trade. My destination and profit target is 20. I'll go 26.90. I think 2,700, 2,800 is fair. Okay. So I'm going to go ahead and just take a small chunk of it right now for $1. I'm going to give myself, that's like a $600 or $700 drawdown. I'm totally fine with that. So let me go ahead and get this trade in. I'm going to start it at market at 21.95. That's a terrible trade, by the way. If you want to wait for a pullback, here is the best way to enter this thing on a pullback. If we break this rising wedge pattern, which I think that we will, we probably have a pullback that's likely coming to like 119.60. Okay. So if you want to wait, buying it like a 120 handle and a 119 or 118 handle, that's a smarter way to at least buy some dips. I'm going to participate because if we go up another, 500 or 600 pips, I at least want to be in that trade. Okay. In that trade for a win. So I'm going to take a small trade at $1 and just kind of scale in my trade sizes. All right. So I'll get this all listed here. Just give me a second. So I'm going to go buy at market. This will be for $1. And my take profit's going to be 26.90. And if I want to get really, really meticulous on the measurement, take this parity move, do this exact measure move right here. This move is 1,400 pips. If you take a 1,400 bit breakout on top of that move, you can see that this is resistance. This is resistance. I truly think that we're going to go to 2,800. So here's what I'm going to do. I'm going to set a take profit at 27.50, and that's 50 pips shy of my symmetry. Now, if I hit 2,700 and I'm in 2, 3, 4, 5 positions, I am probably taking profit on that chunk because it's going to be worth, several $1,000. So I'll take the profit. Okay. All right. So I'm going to buy this thing for, let's see there. That's 88 cents a pip. I'm going to go 16,000 units, 17,000 units. That's exactly $1. I'm going 17,000 units. I'm going to scale in $1, $1.50, $2, $2.50. I'll just scale in. And then 27.50 is going to be my take profit. So I'm in. And now let's find my levels. So I'm going buy level 1 at, I got filled at 21.98, 1.2198. And again, I said this is a poor entry. Okay. But it's not about that entry. It's about getting some skin in the game with, I think the destination is at 27 to 2,800. Okay. Buy level 2. If you're short, Max is saying he's short, that's fine. Look, if you're short, I would be taking profit around like the 2,000 handle. I think this is a rising wedge that at best comes to like, 2,000, 1.20, 1.19, and probably finds, somewhere in this fib. I would think that like a 236 or 382 is probably going to get hit and still end up going higher. Okay. This pair is pretty notorious for pulling back to like 5.0s and 7.86s, which honestly, I'd kind of love that trade if we get it. So I'm going to dollar cost average into those levels. So I'll base it off of this fib is going, near these highs. I'm just going to put a nice fib swing on here and go like, I'm going to go at the base of the wedge. So this thing started out, I mean, it's funny. Like I'm going right back to like the good old days of how I managed a currency fund for all these years. Base of this wedge is around 1.1867. I'm just going to buy the round number at 1900. Doesn't have to be. And the nice part about trading this way is it doesn't have to be super specific and like precise. You just kind of get some trades in and just focus on the big picture. Okay, so this is the base of rising wedge. And then below that, I'm going to start looking at my fibs. So if that's 1900, and I think that we could pull back to maybe the 1400 zone. Let's go to like 1633 is a 382. Let's go round number 1700. Buy level 3, I'll go 1.1710. So spacing and round number at 1700. And then buy level 4 is going to be a 1510. Spacing round number. That's enough. Okay. Those are going to be all of my test levels. All my test levels. Because if this thing doesn't really pull back and it just keeps going, then my destination is 1.2700 to 1.2800, which is fine. So I'll still make about $500 to $600 on my first trade. All right. Now, if it does roll over here where we have a rising wedge and it rolls over and it falls back down, great. I have this trade, which is going to be in a small drawdown. I'll get filled on this trade, and then I'll wait and see if we have deeper pullbacks because that's trade 1, 2, 3, 4. Hold these levels. We have a low to high swing, pull back again, then push to symmetry. There's our destination. Now I'm filled on 4 positions. That turns every trade into, this is about a 600 pip winner. This would be about a 900 pip winner. This is going to be about a 1,000 pip winner. And this is going to be a 1,200 to 1,300 pip winner. This is what's kind of enjoy about the way that I trade like this. When you add this stuff up, I can nurture a small, couple $100 drawdown, couple $1,000 drawdown. When I'm all done on these trades, 600 and 900 and 1,000 and 1,200, you turn about let's say a $2,000 drawdown into a $3,700 profit. And if I scale in with slightly bigger trade sizes, I think this dollar amount becomes, maybe I make like $4,000 to $5,000 on the trade, and my risk would hopefully be less than $1,000. So it's creative planning. It's big picture stuff, but it does work very well. I had a lot of success doing this in the currency space for a decade plus when I was managing almost $10 million in currencies. But it's not easy. Like you have to be extremely patient. You have to be. Just don't use leverage. And I know that most traders with smaller accounts are always trying to step on the gas and use that leverage. That's not me. Not for a trade like this. Okay. So I'm going to get these trades in. I've got one in already. Let me get these trades in, and I'll post this for Pulver Alerts as well. So I'm going to go 1900. So let's do a buy limit. Okay. And that would be at a 1.1900. And then the 1710. Buy limit at 1710. And again at 1510. $15.10. Okay. Okay. All right. So this is a little messy, but I'm going to take the screenshot on my broker platform and throw this into Pulver Alerts. Here's what it looks like. So these are all small, small entry, small entry, small entry, small entry. Now, what I'm also looking for is for past resistance to offer support. I'll look for some bottoming patterns. And if this trade, this is kind of to wrap this all up. If this trade pulls back and fills, pulls back and fills, pulls back and fills, I'll look at a trend line break. I'll also start stacking up buy stop levels up here and still go after the same destination at 27.50. So I'll take these little testers of, small $1, $1.50, $2 trades, and then I'll start adding additional they're not going to be the same unit. I'll add different trade sizes so I can close these out at any order. But if I add another 3-4 trades on here, again, I can accelerate my gains because I'm adding to my winning position. So I never get too aggressive on my dollar cost averaging, and I never get too aggressive on adding more to it. But when we are going from A, B, C, D, or a low, high, higher, low, higher, high, when this is my destination, I like to add more trades over here because it's ultimately going to get there, which is why I price out symmetry measurements. Okay. Like getting to 2750 or 2800 is not random. That's measured. Did I buy it at the market? Yes. I bought a spot market price at 21.98. Okay. So let me take this screenshot. Here, this is probably easier. Okay, so 21.98 poor entry. So I'm acknowledging it wasn't a good entry, but my buy levels here, and I'll put in a take profit. So take profit area is 1.27 to 1.28. I have limit to close at 1.2750 for all positions. Okay. Give me some wise yeses in the chat if that makes sense. If that makes sense. Cyclone says you don't use stop losses. Here's why. In this trade, I'm not trading large enough to use a stop loss. I'm trading, small enough where I can stomach let's say $1,000 drawdown. Okay. Look, I'd be getting my butt kicked if I'm down $1,000 on these things. Like this trade only has maybe a 500 to 600 pip area that I should really be wrong. And I think if anything, this might just go sideways for a little bit and not really pull back much. Like in this positive swap environment with a massive multi-year breakout, I think that the symmetry is the destination to 127, 128. And I think we're going to get there way faster than what we think. So trying to short this thing, the only confirmation I have to short it is I have overbought conditions and I have divergence on a daily time frame and a weekly time frame, kind of like this, and it did pull back. It did pause. But I can see that's maybe all it offers is a pause, maybe a pullback, gets back to here, and then resumes. So I'm going to continue to use this as this is my support zone. Okay. And even if we pull back to that breakout point, that's around 1.14 to 1.15. I'm still going to stay bigger picture to my symmetry at 127, 128. All right. So if you're willing, and again, if you're taking this trade with me, you're trading like a bank. You're trading like a liquidity provider in the Forex space, which is you're never using stop losses. Hedge funds don't use stop losses. Banks don't use stop losses. They have deep pockets. So if you trade small enough, you can also have deep pockets. You can trade 10-cent pips, dollar pips, 50-cent pips. You can trade like I can stomach, a 500 pip drawdown and I'm not in trouble. Manage the dollar amount. So anyway. Like I said, this is a throwback for how I, manage the currency fund. I did a lot of trading like this, and it allowed me to be pretty successful. I had a lot of years that I was making, 20, 25, 30%, and it didn't take a lot of trades. It just took a lot of planning. But once I planned out a trade, I stuck with it, and usually I got these trades to pay me in, a matter of months, and it's worth it. I mean, if I can take I don't know, this adds up to be about a $5 or $6 total position. If I can turn that into a $4,000 to $5,000 profit with less than a standard lot, at least, standard lot, like everyone thinks of the math is like a standard lot's $10 pip. It's going to be less than that with this exchange rate. I mean, I'm just saying it should be something that hopefully I can generate a few $1,000s on. Okay. And like I said, small trade sizes, which means no leverage. I don't want to get in any trouble. If this market is down against me by 300, 400, 500 pips, I don't really care. Okay. And that's a mindset that most traders don't think about, but this is how I'm trading it. Okay. Because here's what I could do. I could say, hey, look, let's just short it right now, get a breakout, go for a little short-term price action here, but I'd turn right back around and want to buy it to take it up to symmetry anyway. So if the bigger picture for me is going to 27, 2800, I'm just going to trade small, trade small, trade small, trade small, level, 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 and still get to the same target and not care about the nuances of this little noise. Yes, a pullback's probably coming. Cool. Give me more buy entries because I think the destination is higher. Okay. Why not expand your fund? Well, I'll tell you why. I mean, I did expand my fund, but I trade now stocks, options, futures. Forex is a much lesser part of my portfolio. Basically, what I'm managing in Forex now is a couple of robot accounts and some discretionary accounts like this. But most of my funds have migrated into trading indexes, options, lots and lots of options. And the reason why simply is risk management. Risk management in trading options is literally, even though I use very little leverage like this, here's the difference. Okay. If I look at this is, literally doing this for like a decade plus. If this is my year from January to December, this is me as a currency manager. Okay. So January to December, here's my P&L. Let's just say I have a $100,000 account. Okay. That 100K starting account would basically do this. And then it'd be up like 10%. And then it'd do this. And it'd be up another 10%. And then it'd do this. And I'd finish the year. I would literally get all my profits in like 2 or 3 trades for the entire year. That's not to say that I couldn't be more active and trade more short-term swings and try to grind this thing out, but it was so much safer and easier to have these trades hit. But what I started to notice is this would take me, maybe 3, 4, 5 months to get profit. That started to take 6 months, 7 months, 8 months, 9 months. And meanwhile, when I'm trading stocks and options, I can take very small risk and have a bias that is up every single day, every single week, every single month, every single year. Why would I not trade that? That is a much easier tailwind than to grind out a Forex trade that doesn't care whether it's up or down. And liquidity and daily trading ranges got much, much tighter, much, much smaller. Brokers are playing games, are closing down servers. It just got a lot different out there. So it's opening back up now, which is good because obviously there's more and more traders coming to the mix. But I mean, trading through the Swiss National Bank and Brexit, and trading through COVID, U.S. traders have very few brokers to work with now, and it just changed. And so rather than waiting for this, it's like, let me ask you a question. If you traded something that gave you a 71% bias to just be one direction, wouldn't you trade that? Literally, if all you did was focus on buying something and it had a 71% chance of going higher, would you trade it? If you're all traders, you like biases, right? You like house edge. So you're starting with a 71% edge. Be long equities and you have an edge. If you want to trade more short term, you have about a 62% edge being long every month. If you want to trade every week, you have about a 58% chance of being long every week. If you trade every day, you have a 54% chance of being long every day and making money. In currencies, none of that applies. You can't say that I'm going to be long this currency pair for the entire year and think there's a probability of getting there because it doesn't matter. The whole world can shift when it comes to currency exchanges. Certain baskets, certain geopolitical events. It's a trader's market. So it just was easier to follow the flow and the house edge, as well as, once I saw that I was getting more disruptions with my algo trading and bot trading, and and I was also waiting longer for these big payouts to happen. I just started to say, okay, I'm doing better over here. I'm going to move money over here. I'm going to go where money's treated best. So do I still trade Forex? Yeah, I still have plenty of capital in Forex, but it's not a fund like it once was. And I'm much happier where I'm at, and I'm doing much better. We've had killer years these last 3, 4, 5 years, and I'm happy with that. So anyway, is it easy to transition from FX to options? If you look, here's what's crazy. Learning how to trade Forex. I mean, I am very thankful that learning how to trade Forex made me a much better technical trader, and applying that to stocks. The only thing I had to get rid of is stop trying to short everything in the stock market, right? Because you're like, oh, it's overbought. The RSI is overbought. The stochastic's overbought. I'm going to don't short. Just wait for dips. Buy dips in a bull market. You know, that's the only change, is like follow the flow of the stock market. But trading options, it's a great transition. I am so happy that, you know, here's how it all started in options. When I got smoked like every other trader in the world in 2008, 2009 with a massive drawdown, having no idea what I was doing, you know, with an investment club, you know, we were down about 30% in our portfolio in 2008 during the great financial crisis, which is manageable, right? Individual stocks were essentially going to zero. So that was small, but we were always like pretty conservative. But being down, it's like, okay, are there ways to protect your portfolio? And so my journey into options was, okay, I have stocks. I own stocks. So buy puts. You know, then you learn how to buy puts and then sell some covered calls. And all that is just an option trade to help protect your downside and also generate some income on your own shares. And that's how it started. And then fast forward a couple of years where I'm realizing, well, I can trade some options. I don't even have to own the underlying stock. I can just trade the index options. I can trade individual stock options and never own a single stock and still make money. And still do it in the same environment with the same type of the same type of biases, which is it's a bullish bias. You know, is the market always up? No, we have pullbacks and pauses and retracements, and we got all sorts of stuff we talk about. But the reality is the market finds a way to go higher. And it's really good at doing that. It's really good at going up. I mean, case in point is we had a nearly a 10% month for April, and we had nearly a 15% month for the Nasdaq from open to close April 1st to April 30th. If you count the March 30th, 31st lows, the S&P almost ripped 13, 14%. I mean, that's historic. We had the win streak of 12 to 13 days in a row. Hasn't been seen since like 1950 or 1980. Like, you're going to keep saying more and more stuff of like, I can't believe that happened. That's never happened, right? Hasn't happened since this historical milestone. The market just continues to surprise us. But the upside is very real. Okay. So anyway, I'm talking about this stuff. If anyone wants to learn options, you're in the right place, because if you are joining, you know, A1 Trading, joining the Discord group, and you're in my Pulver Alerts, I have a 4-hour course on options. And it's 13 of my favorite strategies. And all I need you to do, and here's one I'll give you as a bonus. Nick and team, if this is okay, I've got a trading video here that I will share. And I'm happy to give this to you guys at A1 Trading and share this in addition to my alerts, but I give this one for free for everybody. This is about a 70-minute video for just options. Okay. So I've got it here in my Vimeo library, and I will post it in the chat if you want it. Hopefully the link will take on YouTube. I'll just go to Vimeo. Give me a second. So my Vimeo, let's go to my One Trade Mastery here. And what this video serves a purpose for is, if you watch this video, it's just over an hour long. If you watch the video and it just makes you think, that sounds like it makes a lot of sense to me, I think I could understand putting some option trades in, then that's all I'm trying to accomplish. Because if that sounds logical to take a trade on something, and you can buy the shares, you can trade an option, you can create a strategy trade like a spread. It's just a fancy name. Options have stupid names, which I've always joked about. Like they're the dumbest names, and nobody knows what they are, and everyone's confused about them. But the reality is, if you just understand what you're doing, like I'm buying a call, what does that mean? I'm buying a call here and I'm selling a call here. What does that mean? That's why I call my options course, you know, practical options, because take away all the funny jargon and just realize, like, what am I actually executing and what do I need price to do to make money? So here is my video. I'll post it in the chat. So this is, it's an hour and 13 minutes. If you watch this video, here's what I'd like. When you see me next time in these live chats, if you take this weekend to watch it, digest it, you can watch it whatever speed you want. I already talk fast enough. But if you watch this and it starts to ring some bells and starts to resonate, you get some light bulbs going off in your head, then come back and ask me for more. You know, join the A1 Trading team, join the Discord, jump into Pulver Alerts, get that practical options course, dive a little bit deeper into this. Because look, options does come with a learning curve, but so does Forex, and so does futures, and so does anything you're doing. When you're putting money on the line, it comes with a learning curve. Okay. Like right now, I'm messing around with a phone app on roulette, and I'm trying to figure out, is there a way to actually bet on roulette and win? And there's really not. You can run millions and millions of trades in a Monte Carlo situation. If you have a 0 and 00 roulette table, you're only playing with like a 44 to 45% odds in the gambler's favor. The house still has like a 56% edge. Okay. So I realized, like, if you get a hot streak on roulette, you have to quit when you're 10, 20% up. Quit. Because if you play long enough, you're going to lose. That's what every casino knows. That's the game, right? Anyway, point is, if this starts to get you to think about logically trading, and I'm starting to make the vocabulary a little bit more common sense, or a little bit more practical, then anybody can be an option trader. Okay, look, you can trade options for as little as like $5 and $10. You can trade defined risk trades for like $10 to $20. There's trades I take every single week that are as little as $50 to $100. You know, if you're taking that type of risk in currencies, I mean, again, look at your percentages, look at trading options. You can take the same type of risk with a crazy better bias to the upside. Is the broad market bullish? You have a pretty good chance of winning, right? And also what I like is, think about all the manipulation in prices where we see the wick high, the wick low, and price stops us out because you had to put a stop loss right there. But in option trading, none of that noise applies, because all price has to do is price, time, and volatility. If it just gets above your strikes or above your prices, you make money. If you're short the market, it goes below your prices, you make money. But it's all defined risk, and you know all that going into the trade. And it doesn't matter if the price goes literally to infinity or it goes to zero. Your risk that you took on the initial trade and your setup is the exact same trade all the way through the life cycle of the trade. So there's no funny business at a top or a bottom, no funny business trying to call that top or bottom on a Forex trade or futures trade that wicks you out because it stops you. In options, you don't have that. It's just a line in the sand and the time in the trade. Again, risk management, less manipulation, less funny business, less shenanigans. That's why I like option trading. Okay. All right. So here is the link. I'm going to go manage. I'll find the one. It's going to be a pretty long link in the chat, but I'll post it. So here is video link, copy, and this will post. So let me know if that link comes through. Nope, just says failed to post. Let's see. James, can I give it to you? How can we get this to everybody? Let me do this. Let's put this in. If you're in A1 Trading Community and my Discord, here's what I'm going to do. Inside my journal, I'm going to do this right here. So if you're in for the Pulver Alerts in the journal, I'm going to put one trade mastery bonus class. 70-minute session and opening your eyes to options trading. Okay, if you like this, then you'll love Practical Options course included with the Pulver Alerts. Okay. So here is one trade mastery. There. And I'll put and tag everyone in this. All right. So check it out. If you have Pulver Alerts, check it out. Okay. If I can, I'm totally fine giving this one trade mastery out to everybody. It just wouldn't let me post the link in the chat. So Nick or James, if I can get this to the group, I'm happy to share this with anybody that's here just for free. Yeah, send it here. Okay, cool. So there's one trade mastery. I'm going to send it to James, and then he can get that. So James, if you want to, do you want a download link? You guys can take it and do whatever you want with it too. Let me give you a download link as well. So here's the download link, and then you can post it on the site. You can get people to grab it however they want. All right, cool. So what I'd say is this. If you enjoy the process of trading, if you are trying to do this better and you're trying to become a better trader, I think you owe it to yourself to, just dabble in options and see if it makes sense. As soon as my brain got wrapped around, protecting my portfolio to the downside, generating income, never owning a single stock and still making money, and doing it what I felt was safer and easier than trading currencies and trading futures. That's why I'm an option trader the way that I trade so much options right now. It's how I can safely generate pretty solid returns. I mean, last year was like a 27% year, and I maintained about 50% cash in my portfolio the entire year. Now, some of you might not be excited about, 20% when you're trying to grow like a $5,000 or $10,000 account. But I also have strategies when you trade options that offer like every single day, literally every single day, there are trades that offer 3-to-1 reward to risk, 4-to-1 reward to risk, 10-to-1 reward to risk. And they're actually pretty probable. Okay. Just the last couple of days, I'm up here. I'll show you. So just the last couple of days, I put together one of my strategies here. That is, let's go. So yesterday was up about $1,160 yesterday. If I go back the last 7 days, let's see here, SPX 7 days, about $3,400 net, $3,800 in profit. Let me go the last 14 days, about $5,000. It's like, and I'm not super aggressive. I'm a pretty conservative trader. Oh crap. I'm long already. Sorry, man. This half hour flies by. I was just, laissez-faire yesterday hanging out with Nick for FOMC. So I guess my half hour is done. All right, here's how I'm gonna wrap it up. Sorry, Tiger. You can come on in just 30 seconds. Aussie, New Zealand, you got the kind of like, institutional grade trade that I'm taking. I'm buying, I'm dollar cost averaging in from 122 all the way down to 115. I think the destination is symmetry. The destination of symmetry is around 127 to 128. 127 is conservative. 128 should be like the perfect symmetry. I'd be happy taking profit at 127 to 127.50. Now, if you're short Aussie, New Zealand, I understand. Technically, it looks overbought. We stretched pretty darn far. We probably will have a pullback, but don't expect this to go too much deeper. If you have a pullback here, at best, this might go high, low, lower, high, lower, low. I would get out there and I resume long. That's just me. That's my strategy. So what I'm doing is rather than trying to time this perfectly when we're clearly in a positive swap and an uptrend, I'm just going to buy it. If it goes up, that's easy money. If it pulls back, I stomach a drawdown, I buy more, I accumulate more trades, and I get my destination regardless. And I don't have to trade the market up and down. I just trade it where I think the market's going. So I'm going to try to swim with the fishes on Aussie, New Zealand to hopefully go into that breakout symmetry around 27, 2,800. All right. Thanks, Tiger. Thanks for letting me take up an extra segment. Thanks, James. And we'll see you soon. Thanks.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Friday. Great day by default, as always. May 1st. Yeah, we've made it through a third of the year successfully. We're all still here. We're still hanging. So hopefully you guys are learning some things first third of the year that are helping out your trading. That's really that's really what our goal always is here. So keep it up. It's a process. It's a marathon, not a sprint. So anyway, getting into today, ladies and gents, we did have just the one little piece of U.S. data that there was, more of a medium impact event. And it depends on the calendar you look at. Some calendars look at the PMI as a red folder event. Some look at medium as far as orange. So Nevertheless, though, did have a miss on the forecast. Now, it remained the same. So when it comes to the PMI numbers, we're still comfortably in expansionary territory, really. Anything over that 50 baseline. But we missed the forecast, right? So it stayed exactly the same. So really the way that should affect the dollar over here is we should get a red box over here whenever this updates. If I update it, maybe we'll see if it's updated at this point. I guess it's been a little while since I refreshed it because we were at 55%. And yeah, it looks like we're still there. So that'll update at some point. But yeah, hey, look, the dollar was already kind of neutral anyway. So not really very strong, not really very weak from a fundamental perspective. And then, of course, you throw on top of it the ceasefires, where the money is a little bit, just a tiny bit on the risk on side at the moment, I would say. Taking a look at things like the VIX, you can see we have gotten quite the drop of late over the last week and a half or so. So the volatility, the fear in the markets, if you will, is dissipating to a point, and so is the Dixie. Kind of shows over here as well. Dollar going down, and just as a refresher, we hit at once upon a time, we hit that daily demand for a bounce, the 4-hour demand for a bounce confluence, and that's where we get that spike up. So now we're just kind of retracing our steps a little bit, really, since yesterday. Yesterday we were as high as 99, and now we're all the way down at 97.8 as we speak. So let me know, guys, if you have any specific tickers you'd like me to look at. I've got a couple here. I've got a few alerts we could take a look at. And we did have this yen intervention article come out this morning, guys. If you're paying attention to the yen pairs, you'll see that we did have another spike. This is 2 days in a row. Spike to the downside on dollar yen. So a spike up in the value of the yen itself. But I was just kind of digging through here earlier. Japan's top currency diplomat said that positions remain in markets. Let's see here. Putting traders on notice of possible further strikes to bolster the yen during the holiday period. So interesting article, guys. We could definitely be seeing some more yen intervention coming up in the very near future. Let's take a look at dollar yen on that note and see where we're at. Because as far as the edge finder, I do believe, let me just click on it real quick. I do believe we got a little bit of goodies. Let me go look at my other screen over here. Dollar yen has, looks to me like it's basically fallen off. So we're back to neutral territory again. But I will say it's interesting to see that silver popped back on the list. Now it's got to refresh itself. I'm just looking off screen at my other computer over here. But yeah, we've got a little bit of a bearish look to silver. So it's just barely tall enough to ride the ride. So we'll take a look at that in a minute. But first, for dollar yen, remember, I had been talking for a while about this overhead weekly supply, and that's basically right at the spot where they're pretty well intervening. I mean, taking a look at this doji candle, if you will, on a weekly time frame from July to 2024, rather. But we did get a push up into it. Now, I was calling for the daily. So, I know that dollar yen has fallen off the list, I do believe, back to neutral, at least temporarily. And probably because of that data that we just saw come out, okay, a little bit soft on the PMI data there. Dollar yen has fallen off. So I still remain interested just to see. Now, probably not going to make it up there at this point, but I was looking at an intervention level at the 161.25 level, 161 and a quarter, because that's where that daily supply kind of came in. But we may well not get there. But if we happen to get dollar yen back on the bullish, I still do see a little bit of a discount down here, or quite a bit of a discount down to the 155 level. I just really like this area of demand because this is daily. Having a look at the daily zone down here, and then we've obviously got some confluence within. So we got a 4-hour, I do believe, a couple 4-hour and a 1-hour zone confluences inside. So we're not quite down there yet. Again, we had that big drop yesterday. Looking at the 4-hour chart here. Big drop yesterday, and then now we've had another really nice size drop while we were all sleeping here in the States. So, it's a little disappointing to see it fell off. Obviously, that PMI data didn't help, but if it would have stayed on, I would definitely be interested in a bounce. Now, it still may bounce without us just because of the fact that it's collecting some unfilled orders at this point. but at this point, it's going to be off my list. You can see I've got an alert there, so I would still expect some type of a bounce or rebound where I do have my alert set up, but going to sit on my hands because that data pushed it to neutral. So that's dollar yen. Let's see here, and just flip it back over here to my cheat sheet. Yeah, the intervention article. Netflix, guys, believe it or not, I'm still in that trade. That thing is just hanging on for dear life. That currently remains the only trade I'm in. Netflix. And it's just basically, hanging on from this weekly demand that I had drawn up. So taking a look at the weekly zone over here. Again, guys, supply demand works the same in all the assets so long as it has a pulse. Okay, so we're actually at the upper end now of that weekly demand. So that's where we stand. I do like that we are kind of getting on an hourly chart. We're starting to get a series of higher highs and higher lows coming out of that. Remember, it only missed kicking me out by a few points. So we'll see how that works. I still like the overall look, just kind of a Chinese walk, if you will, or cup and handle if you're looking at this thing from a patterns perspective. Definitely see this thing just kind of swinging back to the upside to kind of complete that. So that's really the goal. That's what I'm looking for, and I'll just sit on this thing. Swaps, spreads, none of that's really too expensive for the brokers I have or the broker I'm using. I'm actually using this on my Ola Prime account, guys, my Ola Prime Challenge account. So that's where I have access to these stocks. So as always, guys, if you are looking for some discounts on Stockbox, I know I've been talking a lot about it lately, but that's just to bring it a little bit to the forefront. We are a currency channel on this specific channel, but definitely check out Trader Nick's stock videos over on his Trader Nick Stocks YouTube channel. And then consider checking this thing out. It's really cool. Okay. It does the same stuff, just the same stuff as the Edge Finder does, just specifically with stocks. So that's where I'm at. And I totally forgot to tell you guys, I was actually in a pound dollar long the other day. I think I failed to mention it yesterday, but I did actually take like $15. So it's kind of funny. Profit on this thing. I had bought on this zone of demand, which started out as a 4-hour demand. I'm talking about this one right here. If I just kind of zoom in now, when I got into this trade, it was on this bounce, but when we rolled back over, that was about the time on Wednesday where we had some data coming out. And I just did not feel comfortable staying in this trade. And it was due to obviously the FOMC rate. That's what it was, the FOMC statement. So I actually just before, and this is Central Standard Time, by the way, so just at an hour. But just shortly before, maybe 15 minutes before, I went ahead and moved my stop loss on this thing to just to hit a break even. The cup of coffee trade, I call it, okay, enough to pay my swaps, my fees, spreads, all that fun stuff. And just it ended up wicking down. Ironically, it wicked down to click me out, but it turned around and went in my favor. But the thing is, with those Fed statements and a lot of these high impact red folder events, NFP reports, things of that nature, I just didn't see the need to take a needless loss on this thing. Now, it just so happened it went in my favor, but that's just another form of reward risk management, guys. If price is right there at the start, if you're just a few bucks in profit and you don't know where the heck this thing's going to go when a release comes out, it's just good just to move it to break even, or as I say, a cup of coffee trade, so that you can at least cover your swaps, your spreads and all that, the fees, I should say. So a whole $15. Are you proud of me? So that it goes along with JP Morgan paying me the $600 or whatever it was. So that's been my week so far. And then this Netflix trade is one I opened last week. So I'm just going to let it run. Okay. At the end of the day, the swaps, the fees aren't really that much. I think I paid like $10 in fees or something. I'm just going to let it roll. Time to look for buys on dollar yen. Yeah, Biggie. I agree. But it is just a little disappointing that it fell off the list. And again, that was due partially to today's report on the PMI data. Okay. So still expansionary, but did not raise like the economist had predicted. So as a result, dollar yen is now a neutral +3. Technicals, yeah, clearly it's given us a -1, the moving average crossover that Nick uses in the algorithm. So yeah, we're getting a -1 on that sentiment, and then we did lose a little bit on the eco. Okay, so that's where we're at. A little bit of a change on the tech, a little bit of change on the eco. So it'd be nice to see if we can flip this thing back around. I mean, look, I don't want to catch a falling knife at the end of the day. But if I had to catch a falling knife, I do like this area. So I think what I'll end up doing is just wait till it comes down to this 155 area. And if and when it does, and again, if and when Edgefinder turns around and gives us a bullish signal again from some other data and such, then I think what I'm going to end up doing on this thing is just waiting until we get a drop into the zone. And I may just do this on a 4-hour time frame. I'll wait till we just kind of get some. Let's draw it like this. I'll show you exactly what I'm looking for. Okay. Get a little bit of a drop in, and then what I want to see is a break of structure. So this little swing high, I just want to see it just go a little higher. If it goes a little bit higher, this is just a little bit of a confirmation. What does this do? This creates a new impulse leg. Why do I call this an impulse leg? Well, because it broke that structure right there. If it breaks that structure and closes, this is looked at as what most people would call a change of character. I just call it a break of structure. It's breaking a structure to the upside. So if that means that this is a new impulse leg right here, would be impulse leg, well, that's where I'd be wanting to look for a discount into a demand. Okay. I don't want to just buy up here just because it broke structure, because quite often it'll just turn around and reverse. Well, when it reverses, like it does quite a bit, that's where I'll be looking for a newly created zone of demand somewhere in this area, preferably even right at this area, because we've got now a double bottom over here, okay, that we could take advantage of, meaning support, former support possibly becoming support again. And then, look for a buy to the upside. So this is exactly the way I would want to map it out. Find a newly created zone of demand right here. But the important piece is this, and I know I've showed you guys this in the past, make sure that it doesn't just create a double top and reverse. I want it to break and close above this swing high. Break above, close, then that gives me permission, according to the rules that I've set for myself, my personal algorithm, that gives me now permission to buy a newly created zone of demand. So it's going to be higher than the original higher time frame zones, but this is at least confirming that it's at least attempting to start a new series of higher highs and higher lows. And then from there, depending on how the price action shakes out, this is where we can decide if we want to be aggressive and put our stop loss below this newly created zone of demand. Below this new demand zone right here. Do we want to be real aggressive, have a really strong reward risk, or do we want to be a little conservative, understanding that we still have some zones below of liquidity that could be attacked or swept? Obviously, the safest thing to do, in lieu of that giant drop we had from the intervention from yesterday, the safest thing to do, highest probability as far as making money on this trade, probably going to be to just leave it underneath the whole set of zones, all these zones over here. And then from that point, you've got a waterfall down. And quite often, guys, when you get big waterfalls down like this, oftentimes you get waterfalls back to the upside to kind of close that gap, because this is what this is one big gap. And from here, we have an easy profit target right there, because we got a supply zone. Right before we had the drop, and I said yesterday, but I meant to say Wednesday morning. Or no, I guess that was, I should say Thursday Asia session. We had a consolidation. We had a basing structure create itself. And remember, that happened a little bit deeper into the weekly supply zone from 2024 that I pointed out. So that to me presents a really good reward risk ratio, even with being ultra conservative and putting our stop loss all the way down here. So let's map that out. Okay, that's going to basically, we'll call our entry here off that demand zone. Okay, 188 pips. Is that right? No, I think I looked at that wrong. Yeah, 100. It's a lot of pips. It's 180 pip stop loss, but you're looking for a return to 452 pips. We'll just call it, because obviously the goal would be to sell out, or at least lock in some gains before you hit that supply zone right there. Last thing I would want is price to bounce into the supply zone and get greedy and not move my profits, and then it just take away all the unrealized gains to the downside on another intervention, right? These interventions kind of come in waves at times when they do happen. Again, I showed you guys that Fred website yesterday, the Federal Reserve of St. Louis. You'll see that whenever they do those interventions, they tend to do them, sometimes a couple, 3-4 days in a row, or not necessarily in a row, but over a short period of time. So yeah, they did a big chunk of it yesterday, and then they just brought in another chunk. Okay. Another chunk of yen buying, dollar selling specifically. So yeah, that's what I'm looking at for dollar yen. I know again, trading is just like playing pool, snooker, 8-ball, 9-ball, trying to look a few balls ahead, trying to look a few moves ahead, see what the possibilities are. And then of course, you do have this minor supply zone right here that I didn't even draw up yet on a 4-hour chart. So that would obviously be the first stepping stone, if you will, or the first checkpoint, just to make sure that it's going to be able to, this move up is going to be able to chew through it, keep going. I mean, I would expect a push into it, maybe a little bit of rejection down, but ultimately a continuation. And if they step back in with some more intervention activity, then that trades off the table. But we'll lock in a stop loss and just keep losses small, or maybe even just kind of stair step the stop loss up. So that's a little bit about dollar yen. Hopefully I didn't over explain that. Rafael, euro yen. What else we got up here? Yeah, euro yen. Let's take a quick look at that for you. Go back over here. Euro yen neutral -2. My nose is itching like crazy. So we'll take a look at this thing on a technical chart and see what we got. Daily on the right. All right. So, and this is going to be very similar to what I just showed for the dollar yen. Let's clean this up a little bit. Daily, that's out of the picture. So yeah, kind of stuck in the middle. We got the intervention threats dropping these pairs. And also the fact that, okay, well, I will say this. When it comes to euro yen, we did have our ADMA pushed down below our 21. So when we're just looking at kind of a little bit of odds enhancer on the front of moving average crossovers and such, this is actually giving us a little bit of a downtrend. I didn't look. What did that look like on dollar yen? Okay, so dollar yen is crossed down as well. Okay, so this again is why I want to rely on Edge Finder and wait to see if these zones of demand actually push price up to give me that new series of higher highs and higher lows, break that structure to the upside. That's just a little more of a confirmation entry, guys. It beats just putting on a limit order or just buying just because it hits a price point and crossing your fingers. That's why I love these confirmation entries so much, is because it basically is taking away half of the question that you have, because the question is, are we going to actually reverse? Well, if it's at least breaking that first series of structures, that's half the confirmation. I would say half. It's not 100% because it could very well turn around and just keep going down. But that's just where it makes it a little easier. It takes off just a little bit of the risk. But yeah, just going back to euro yen, it's going to be kind of a similar picture. We do have our moving averages flipping back to the south, okay, flipping down to the downside, and rightly so for euro yen because it is -2. The dollar, I do believe, is still a little bit stronger than the euro last time I checked. So just double check that real quick. So dollar, yeah, dollar. Okay, so they're basically the same, which again, that dollar one should update. Actually, it's going to be a little less. So they're pretty well the same. The point is with euro yen, okay, the euro being 50, the yen being the stronger of the currencies, that definitely keeps the bearish move intact, unlike the dollar yen. Okay, if we're trying to buy dollar yen, you got to keep in mind that it's pretty neutral while the yen is still technically quite strong right now. Okay, from a fundamental analysis perspective. So anyway, yeah, just to kind of finish off on euro yen, I don't really have a play on this thing. Don't really have a play. It's just, at this point, is it going to create one big sideways confusion, which it's kind of already doing now, just on obviously about 100 pip range or so. I need to see it break out of that range to the downside and see if we get any more euro weakness or dollar strength. If that happens, then, we can look at this a little further into the future. I don't think I really have anything for you right now. I mean, if you're a sideways trader, you got some supply here, you got some price demand on smaller time frames, but now we're starting to get down in the smaller time frames, the noise. You do technically have a supply zone right here, which we had the same thing on the dollar yen. Okay, we did have a big push down, but we left zero gap. So again, too sideways, too congestiony. I think there's better items out there for us to find, quite honestly, than the euro yen. Hope that helps, man. I wanted to take a quick look at my alerts. I'll go a few minutes over since I did get a little bit of a late start for you guys. So yeah, just let me know if you have any other tickers real quick. Aussie Swiss, Euro Swiss longs, Joseph. Yeah, let's have a look. Aussie and Euro Swiss, which Aussie is obviously the second strongest currency, and these pairs have been up here the whole time. So let's take a look at these top two pairs. Yeah, and then if I have a chance, I'll get to Euro Swiss, Aussie Swiss, Aussie yen. Let's go do that. Aussie yen. Starting to get a little bit of allergies, ladies and gents. That's why I sound so sluggish. I'm not sick or anything, but allergies at this time of year tend to get to me just a little bit. So I'll just keep talking and burn them out. Aussie Swiss. Yeah, so it's still working on the pullback. So this thing's been up so nice that this last basically few days has just been a little bit of a retracement. So is this profit taking? I feel like it probably is because it's such a strong pair when we look at all the fundamentals, sentiment, technicals as a collective whole. We are technically in what the algorithm draws up as a demand zone. You guys see the little white bars there. I don't agree with it because the base and candles are way up here, and we already had a wick that came all the way down here. What do you think that probably is on a smaller time frame? Probably a little bit of a liquidity sweep. So in my opinion, even though the algorithm draws it up, I don't use these. That's, again, just years of studying this stuff. I mean, I need the candle body. If I'm looking at this as a zone, I need the candle body to come down and match that. I know that doesn't quite draw it up the way I was hoping it would, but the red candle, if I turn off the order block tool, okay, it's a red candle. I need that red candle to be coming down to at least match the wick, and it's just not doing that. So I ignore those whenever the indicator pops it up there. Again, guys, this is a free indicator. Anybody can find this order block tool or supply and demand tool, okay? Multi-time frame S&D, supply and demand, order block. This is the developer at JP7FX. You can go find that on your own. Just go to the indicators, type that in, and you'll find it. So it's just a good set of training wheels if supply and demand zones are new to you. I almost don't even use it anymore, but sometimes when I get too many drawings like I have right here, I'll turn all my drawings off, and I'll just turn on that order block tool, turn everything off, just so I can get a holistic look at this thing and ignore everything else. Okay, that way I can see where the algorithm is creating zones, and then I can decide for myself if I like it, if I agree with it. So I disagree with this one, but I do agree with the one down here. I've put an alert there, as you can tell, because I am still keeping an eye on it on a smaller time frame. Get my goodies back on over here. And that's going to be a little bit deeper down. We've basically already touched it. So yeah, I don't like this anymore. It's too high on the curve overall. I know I'm going a little over. Sorry about that. Too high on the curve. I need to get more of a discount. So I've got this one I'm keeping a look on, keeping an eye on an Aussie Swiss a little deeper at the 55.50 level. Turn on my drawings again. And it's at least a sweep of liquidity right here before bouncing into the zone. So that's why I've got my alert there, 55.50. Yeah, I drew this up, but the part of the reason I drew this one up is because I was, again, looking at it on a smaller time frame. So this would be the candle I was looking at with zero volume spread analysis. And then we drop into even smaller time frames. I am keeping an eye on this 15-minute zone here, because technically it gave us a decent gap on that time frame that did push up through some of this mess, but I don't feel like it pushed up fast enough, quick enough. So yeah, I drew it up, but more so as an intraday look today, since it is Friday and I don't want to necessarily be getting in any brand new trades on my normally daily 4 hour. And go into the weekend and potentially get it gapped beyond my stop loss, 100 pips. It's not a very fun thing to do. I'm already living on the edge with the Netflix trade I'm keeping open. But I just, I'm pretty strong about that weekly demand zone. So we'll see. We'll see how that all shakes out. I know that probably was a long way of not really giving you a ton of information on this, but yeah, I just need more of a discount on this. And then, yeah, real quick on Euro Swiss, and then I got to close the shop down, guys. Euro Swiss, okay, 4 hour. Yeah, so I still got some zones a little deeper down. This is an old zone, but it's already been mitigated, as you can see over here. So I don't even know why I have that one drawn up because it's already been touched. So all this is old news. Keep an eye right here on this 2 hour zone of demand. If I look over here, back to the left, okay, right here, this is the one I'm keeping an eye on presently, where we did have a base. We had a couple expanded range candles come up that broke and closed above structure, gathered itself, kept going. So that's currently where I'm looking at for Euro Swiss. All this is right here is one big liquidity sweep for all these bulls right here that did have the power to push price up. All their stop losses are just chilling down here. So I do see right now we're kind of getting that liquidity sweep, as you can see. I just think the real play is a little deeper down where these unfilled orders are from this zone of demand. So just to wrap this thing up, I see this thing just playing around in the liquidity, sweep it, come down, collect a couple, some orders from this 4 hour. There's some confluence. You see the white bars there, the white lines, and then an eventual push back up. That would be the technical look on this thing, Euro Swiss, but it is only a +5. So this one is just barely tall enough to ride the ride as well. Not very convincing. Break structure, break liquidity, grab unfilled orders, get a change of character back to the upside, and then I'll see about a possible buy on this. So hopefully that helps. Ladies and gents, I have went past my lot. Have a wonderful Friday. And with that, take care, and we'll be back next week. Take it easy, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.